Welcome you all. Today's session is about audit trial, and before that, can you please stand up for our motto song?
Yashasupteshu jagrati, Yashasupteshu jagrati.
Let me welcome our speaker of today, CMA, Mr. Rajaganapathi sir.
Please. Laptop.
Good evening all.
So let me give a short introduction about our speaker of today. Mr. Shanmugam Rajaganapathi is an Executive Director in Technology Risk Assurance Services with Pricewaterhouse CA and having 35 plus years of professional experience and around 20 plus years in system audit. He is leading a team of technology risk assurance professionals for Pricewaterhouse, assist and guiding team in performing business process re-engineering, internal control automation and optimization pre and post transitioning of process and control, and specialized in ERP security audits including SAP, GRC, SAP ITGC, SAP PP, conducting shared service centers audits, shared service center audit and report to stakeholders. So I welcome you all sir, and sir, over to you sir.
Thank you.
I invite Mr. C.A. Kumar to present a memento for our today's speaker.
Yeah. Sir, kalau long. Masukkan ni. Yeah. Sir, one side, sir. One side, sir. Hello. Am I audible? Yes.
இன்னும் கொஞ்சம் ரைட் பண்ணுங்க.
இன்னும் கொஞ்சம் height.
Hello. Better?
Yes, sir. Okay, sir. Height.
Good evening all. Thank you so much for the nice introduction. My name is Rajaganapathi, you can call me Raja. So this session I'm going to talk about audit trail. I don't know how many of you have gone through this audit trail audit for the year 23-24 as we speak. We have almost done a couple of clients in our Chennai practice, and there are practical issues, practical difficulties, the requirements vis-a-vis what is available. So we'll talk about it during the presentation today. So with me I got Mr. Lingarajan, which is a manager from our office, and he is going to assist me in the presentation experiment. Thank you, Lingarajan. So what is slide change. So what are we going to cover in this? So we are going to have three different topics in this. One is going to be about the audit trail, the regulatory requirements, what it is, and what is that we should do in audit, testing audit in SAP. It's not a detailed one, at least at a very high level as to what are the functionalities that are available in SAP, how it is meeting the requirements of audit trail, and we'll also talk about the FAQs, which are forming part of the revised edition of the Institute's guidance note on the implementation, audited implementation guidance note. So we'll talk about that as well. Okay, so let's move on to the audit trail regulatory requirements. So before we talk about it, so in this content, what I'm going to cover is the meaning of audit trail, what it is, certain definitions which are relevant for our understanding of audit trail, and then the regulatory requirements, this accounts rules, the audits and auditors rules, and what is it, the comparison between them, and what is going to be the management responsibility vis-a-vis the auditor's responsibility when it comes to audit trail, applicability, the requirement regarding preservation of the audit trail audit approach, and then auditor's consideration, the preservation of audit trail, what is audit reporting, potential exceptions, what we have come across, the practical challenges, etc. So we are going to cover that as part of the regulatory requirements, and then the remaining two sections also we are going to cover. So before we start this, let's understand the meaning of audit trail. What is an audit trail? What is an audit trail?
Every transaction must have its date of recording, the source of recording, when it was created, when it was passed, when it was changed, particularly the capturing of the changes.
So there should be some traceability, sir, of the events.
Exactly.
Transaction, traceability of the transaction. Yes.
Traceability of the transaction. It could be even creation of a record, or it could be changes to the existing record, or it could be even deletion of a record. Okay? So that's the meaning of the audit trail. So let's look at it. It's a chronological record of changes to data or a record itself. When I say chronological order, date-wise, maybe activity-wise, listing of all the changes that are done in the system, and it could be listing of all the entries that are created in the system itself, right? So what does it include? Generally, the audit trail includes the www, when the data was inserted, or when the data was modified, or who made it, which user in the system has made that entry or changed the entry, what was changed. Meaning, initially I had a value, X value, that X value has become Y value now. So the auditor should be able to see both the old value and also the new value. So that www is very important from the audit trail point of view. What, who, when, who and what, right? So the audit trail has to be enabled at the accounting software level, or it should be captured in the database. Okay, so a bit of technical thing here. Every application will have its corresponding database, correct? So when I make a change at the application level to a transaction, it should get recorded in the database. It could get recorded in the application itself as a front end, but the underlying data will be there in the database itself, right? So audit trail will have to be captured either at the application level or at the database level. I'm talking about the application level changes. So this is the meaning of the audit trail. With this background, okay. So before that, if you look at the regulatory requirements in terms of the the accounts rules and also the audit and auditors rules, they use the term audit trail, audit log. These terms are interchangeably used. All of them are giving the same meaning. Whether you call it as an audit trail or audit log or edit log, it means what we discussed. So before we get into the regulatory requirements as such, we need to understand some basic things. I'm not sure you're all aware of it. We need to understand what it means by books of accounts as per the Act. So when I say Act here, it's referred to the Companies Act 2013, right? So what is the definition of the books of accounts? It is not new to us. So the books of account is nothing but all sums of money received or expected in relation to the resisted expenditure, okay? And then all sales and purchase of goods and services by the company, assets and liabilities, and then in items of cost as may be prescribed under section 148 of the Act. So anything which is coming under this is nothing but the books of accounts. So why is it important for us to understand this? Because when we talk about the audit trail will be linked to the books of accounts. Any change to books of accounts will have to have an audit trail. Any change to the money received or money expended, or any changes to sales and purchases, or any changes to assets or liabilities, or any changes to cost items will have to have an audit trail.
I have a question here. See, in a SAP environment, everything will be part of the audit trail because from the bill of materials to your GRM register, everything will be part of the audit trail, correct?
No. Sorry, sir. That is the understanding. That is why exactly I introduced a topic there on SAP with a question to ask you: is it SAP fully compliant with audit trail? Most of you sitting here will raise your hand to say yes, it is. But the reality is not so. There are different concepts in SAP which drives the audit trail itself. So I will talk about that briefly in the second section. Okay, so we understand the books of accounts. Okay, so what is an accounting software? Because we are going to use a term very, very regularly. What is the accounting software? Accounting software is any application which is used by the entity to maintain the books of accounts. Right? If I have to purchase something, so I have to create a purchase order, goods receipt note, vendor invoice, payments, and all that will happen in the system. Similarly, my sales. Any accounting software which helps the company to maintain the books of accounts is called an accounting software. Right? So with this understanding, let's move to the regulatory requirements. So what is the regulatory requirement? The first one is about the proviso to Rule 3(1) of the Companies Act 2014. Okay? This is the management side of it. I just read it out. Provided that for the financial year commencing on or after 1st April 2023, underline 2023, every company which uses an accounting software, the definition which you have seen in the previous slide, for maintaining its books of accounts, shall use only such accounting software which has a feature of recording audit trail of each and every transaction, creating an edit log of change made in the books of accounts along with the date when such changes were made, and ensuring that audit trail cannot be disabled. I've enabled it, I shouldn't be able to disable it during the course of the year. When I disable it, it is not operating effectively. Okay? So if you look at the bold ones, effective 1st April 2023, every company, there is no exemption. Accounting software, anybody having an accounting software to maintain books of accounts will be subject to this. somebody is having a manual books of accounts, which is unlikely, they are not required to be compliant with this. Right? Maintaining books of accounts, the accounting system should have a feature of audit trail. It has to have a feature of audit trail. Okay? For every transaction, each and every transaction, creating an edit log of all the changes with a date when some changes were made. And the last line is it cannot be disabled. So this is the account rule. So what is the audits and auditors rule? This is about section rule 11G of Companies Act. Companies audits or auditors rules 24A. Now auditors responsibility. Whether the company, in respect of financial years commencing on or after 1st April 2022, the account requirement says 1st April 23, auditors requirement says 1st April 22. Just note it. Has used such accounting software for maintaining its books of accounts, which has a feature of recording audit trail within edit log, within brackets edit log, means audit trail, edit log, and all that is one and same. Edit log facility, and the same has been operated throughout the year. Right? For all transactions recorded in the software, and the audit trail feature has not been tampered with. And the audit trail has been preserved by the company as per the statutory requirements of record retention. Okay, so we looked at the account rules, we also looked at the audit and auditors rules. There are some comparisons you can make, right? What is the similarity and what is the differences in it? So let's look at it. So back to log the audit trail. Audit trail has to be maintained within the accounting software. Both are talking about it, no differences, no issues. What to log? Account rule says each and every transaction creating an edit log of each change made in the books of accounts. Whereas companies, audits and auditors rules talk about all transactions recorded in the software.
So this is what I asked. When you say, see, even on SAP, even Oracle is an integrated package, integrated ERP. So even that means whether it is financial or non-financial, everything will be subject to audit, correct?
Not required.
Some features of the ERP may not have financial implications.
Correct.
For example, your quality logs may not have a financial implication, but still that has to be forming part of the audit, right?
Not required. That's what I'm trying to drive at. Will that result into changes to books of accounts? The one which you are talking about, the production order maybe, or a purchase order. Well, while creating a purchase order, is the purchase order going to impact your books of accounts records?
It's not a transaction. It is not a transaction requiring us to pass anything.
Yeah. So,
but we are supposed to give about commitments, no? Like things like capital commitments, which has to be disclosed in the financial statements. Definitely will have an implication.
No. What you should do is you should read it in consonance with the books of accounts. Let me be very clear.
Correct.
So all your, initiating a purchase order, the maker, checker, and all those things, it does not affect my books of account per se. It is going to be in a separate. It is going to be in a
Separate subsystem.
It will be my purchase or material procurement subsystem. The moment any of the transactions hits my account books, which I am going to define what my account books are.
For example, my inventory books.
Yeah, that is something which you have to define.
Yes.
So anything which hits my accounts, books of account, that should be subject to an audit law.
So that's what. Otherwise, what will happen is you will end up identifying everything as books of accounts, and then it will be difficult for the companies to implement it. It will also be equally difficult for the auditors to audit it. So that is why we need to be very clear as to what is books of accounts. That is why I started the definition of books of accounts. If any transaction, if you believe it is having impact on the books of accounts, either by creation, modification, or deletion, that should be subject to, the audit rate.
Because creation of a purchase requisition or a purchase order will not have any immediate impact on the books of accounts.
That's it.
Okay.
So I'm creating a user account. I'm just, see, most of the references I'm going to make it here will be based on the implementation guidance note issued by the institute. When I say institute, I see I, because that is where, I mean, it's like a Bible, I would say, because everything is pretty well covered. So I'm going to reiterate some other points from there itself, because it's easy for you to go back and connect with the literature that's already available. So, it is each and every transaction, creating an edit log, each change made in the books of accounts. So this is where the highlight, any changes to the books of accounts, meaning even though the audit rule says all the transactions, it is limited to the transactions which are impacting the books of accounts.
But isn't this a conflict?
No, see, the accounts rule says impacting books of accounts. So I'm going to audit that. So then I have to define my own boundaries. So all transactions, meaning all transactions are impacting my books of accounts.
So I have to read it that way.
Exactly. So in fact our guidance note talks about user creation as an example. I am creating a user account in a system, creating a new user to the application. It's an addition, it's a change, but it is not a change that will impact my books of accounts. So I'm not going to insist that audit trail needs to be maintained to that. Okay. So I will have some examples to share later. So period of operation, account rules, sorry. So account rules not specifying any period of operation, but audit rule says it should be operated throughout the year. So there is a issue. Every word here will have an impact on the how we are going to audit. So the next one is okay. Yeah. Audit trail feature says audit trail feature cannot be disabled. Yeah. Audit trail feature has not been tampered. Auditors are supposed to be saying audit trail feature has not been tampered with, but account rule says audit trail feature cannot be disabled. If you look at ERP scenario, ERP will have configuration where it can go and enable the audit trail or disable the audit trail. So it can't be 100% always audit trail enabled. So there is a practical difficulty over there. Next one is audit trail retention.
So you'll be in your talk you'll be saying where to go and see where it is enabled and disabled and all that in my ERP thing, because I had a challenge there where it is to be where I have to go to see when it is enabled, when it is getting disabled, and who is the person who is going to do that, and at what point of time. That also has to be logged again.
Exactly.
So I just had a challenge in trying to identify that particular.
Yeah. So SAP, if you talk about SAP, it's
SAP or any other ERP.
Yeah, I can just give you a very, very high level, because if you look at that itself is a content to be delivered for about 3 hours. If you talk about SAP, which configuration I have to go and see, what controls I need to look into it, all that will have its own complications. But at a very, very high level, I'm going to tell you, these are all 3-4 things that you have to take care of when you do an audit of SAP. I'll look at it. So audit trail retention, it is not specified, but accounts audit rule says it has to be retained as per statutory requirements. We know what the statutory requirement is, to retain the books of accounts. And then effective date, it's very interesting. Account rule says effective 1st April 2023, but audit rule says 1st April 2022. Companies have not implemented audit trail. How will you go and audit it? So that is why even if it is April 2022, the audit and auditors rules is applicable only from 1st April 2023 onwards. So 1st April 2023 to March 2024 for the last financial year, now we'll have to report on the audit. So this is just to compare and contrast between the requirements of accounts rules and audit and auditors rules.
Which one to follow? Which one to follow by doing the audit?
Sorry? Sorry?
So you have differentiated between the two, or while verifying the audit trail aspect of it. Which one to follow in this?
So any changes to application has to have accounting. Application has to have audit trail feature. There's no doubt about it.
For example, you say period of operation.
Correct.
You say not specified.
Mhm.
The other one says throughout the year.
Correct.
So when we verify, when we go for audit purposes, which should follow between the
You
two?
should follow audit and audit test rules, no? Because you're auditing, you're not company is implementing it, you're auditing. Auditors will have to follow company's audit and audit test rules.
But then the auditee will say that as per my requirement, I'll do only this.
Yeah, but we should tell them, as an auditor, I'm supposed to be reporting this. So you'll have to do it, otherwise I'll have to report it is not available. So, just to summarize, it has to be there in the accounting software. It has to capture changes to any transaction that has impact on books of accounts. It has to be operated throughout the year. Audit trail features should not be tampered with or should not be disabled during the audit period. We'll have to test whether it has been disabled or tampered, and we'll have to give reporting accordingly. And then it has to be audit trail has to be retained as per the statutory requirements. And the effective date is, just to clarify, it is effective from 1st April 2023 onwards. Clear? Okay, so let's move on. So now comes management responsibility. What is that management has to do? Management has to follow the accounts rules. So they will have to identify. So they will have to identify the books of accounts. So what I mean by books of accounts, that has to be identified by the management, right? And ensure that software has an audit trail. That's a management responsibility. Auditors will go and see whether the application is having an audit trail feature or not. But management responsibility is to make sure that they use an application which has an audit trail feature and that is supporting the books of accounts. Okay? Audit trail has to be there for each and every transaction, creating edit log of each change made in terms of when changed, what changed, and who changed. That is audit trail. Operation, audit trail feature is enabled and operated throughout the year. Okay, even though it is not forming part of accounts rules, they will have to make sure it is operating throughout the year, otherwise auditors will qualify it. And then comes the database level. That's very interesting. In addition to enabling audit trail at the application level, one has to enable the audit trail at the database level as well. Beginning I said, every application will have its own application and also the database. So, there could be some database administrator who could log into the database directly and make changes. So those changes will have to be captured in the audit trail. That is possible only when you enable the audit trail at the database level. So that is fourth element of it. Okay. Then control. So after implementing all this, management should have a control to protect any unauthorized modification to the audit trail configurations or unauthorized modification to the audit trail records. They will have to have controls over it. Then comes the retention. Okay, this year I enabled it, kept it, but if it has to be maintained for another 8 years down the line, how will I manage it? So that again management has to implement it. So identification of the accounts or accounting software which is impacting the books of accounts, enabling audit trail, making sure it is operational throughout the year, enabling audit trail at the database level, having controls over unauthorized modification and retention. All this is the management responsibility. Okay. Now comes to auditor's responsibility. This is again defined, in 11G. Now, if you look at all this, we'll start with a wording like whether the company is using accounting software which has a feature of recording audit trail. You say, management identify 3 applications. These 3 applications are impacting my financials, books of accounts. Whether these 3 applications are having the audit trail or not, audit trail feature or not. First thing that you check. Second one, whether the audit trail feature was enabled and operated throughout the year. Somebody would say, yeah, I enabled it on 1st of April, but disabled it on 31st March or 31st December. It operated for 9 months. 1st of January onwards, up to 31st March next year, it did not operate. So, we need to see whether the audit trail feature was enabled and operated throughout the period. Then comes completeness, whether all the transactions recorded in the software are subject to audit trail or not. So going back to the discussion that we had, assuming that one of the documents which are impacting the books of accounts not identified by the management for enabling audit trail, it's a problem because any changes to that set of records will not get captured. Okay? And configuration, whether the audit trail feature is configurable, meaning whether it can be disabled or tampered with. So that is where, sir, the control that you said is going to be important. I've enabled the configuration at the beginning of the year, and how do I make sure that that audit trail configuration has not been disabled or deactivated during the course of the year? If at all I have to make some changes, who will make the changes? What are the controls implemented by the management to ensure those changes are valid and authorized? So that's going to be important. Record retention. So whether the audit trail has been preserved as per statutory requirements of record retention. So this is what we'll have to, auditor's responsibility. So we looked at management's responsibility. We also looked at auditor's responsibility. Now it's clear in terms of what as an auditor you'll have to do. Okay, or what as a management person I have to do to make sure I'm compliant with audit trail requirements. Any questions so far? I'll take the questions as it is.
Sir, in SAP, sir, when we ask the client, they are saying it is default in the SAP that you cannot pass backdated entries unless that system administrator opens for that year-end closing or month-end closing or quarter-end closing. He is saying it is default. So he is saying there is no separate audit trail. Means the day one of the SAP, it is implied that this audit trail is involved. Only the ICA or Companies Act is recently introducing all these things. We are following from the day one of SAP like that they are saying. But when we ask, is there any module to check you have disabled, you have enabled, where is the module? No one know actually exact. So can you touch on that part, sir?
We will do it. So when I talk about section 2, SAP audit trail, I'll touch upon that. So your point is valid to some extent. In any ERP, forget about SAP for a moment, any ERP for the matter, if you are passing an accounting entry, once it is posted to financials, you will not be able to change it. You will not be able to delete it. It is not a tally. It's an SAP or it's an Oracle ERP, right? So you will not be able to delete, change any entry which has already been posted.
You have to either reverse it.
You will have to reverse it. You have to call it entry, reverse it, or pass an adjustment entry to that effect, right? So that is there, but there are nuances to it. So that is taken care of. But there are elements where you can configure what can be changed, to what extent it can be changed. So those are all the finer aspects of configuration one has to verify to say, yeah, I know you are not, SAP in fact has given a note to say that I'm 100% compliant with the requirements of the Act, the rules, and you don't worry about it. But when it comes to some final, details of it, there are issues. I'll briefly touch upon it.
In fact, when I was suggesting that if I go to the audit trail and at the audit trail level, if I want to change certain fields there, it says this will result. First of all, it is disabled. I cannot change it. Second thing, assuming without admitting that I can change that particular field, it says then it will not accept it because it will not at all accept it because it will lead to inconsistencies in the recording of the audit trail.
Correct.
So that is the reason why it will not be, you cannot do anything there, you cannot tamper with that audit trail, which is the reason, which is why we can conclude it to be quite robust, is what they were saying.
Yeah, so again, it depends. So you will not be able to change anything which is posted, you will not be able to modify certain data which are inherently non-modifiable. Even if you configure it for modification, system is not going to allow you. So, but there are fields which will have an accounting impact which can be changed without trail.
Yes.
So that is what I am focusing on. Fine, 90% you are there, 10% you are not there. Audit reporting is all about factual reporting, right? I can't say materiality, I can't say there are compensating controls that management has, all that is fine. I can't do it. Factually, I need to say there are 15 fields in that table, whether all those 15 fields are protected for audit trail or not. If you believe that 5 fields are not done, will not report those 5 fields are not done. What impact of that to the audit, to the financials, etc., is the next question to be answered. So that is where you need to be clear as to what transactions, what tables, which fields, how many of them are okay, how many of them are not okay, and those will have to be reported.
My point is on the record retention. So the implementation guide says the reporting on record retention commences from the next year.
Correct.
But when we see the accounts rules, it gives a requirement for daily backup.
No, backup and audit trail are two different topics.
It is different, but including the audit trail, it needs to be backup, which is a requirement of the rules.
Yes.
So if there is a transaction in month of April or May that has to be retained as at 31st March, is that not a requirement which I am supposed to affirm in the audit report, rather than saying this requirement kicks in from the next year?
So, when you look at the books of accounts for the current year, so first of all, the books of accounts includes even the audit trail.
Correct.
So, when I signed the financials for the year ending March 24, I assume that all the records are, the books of accounts is kept, including including the audit trail is there. Okay, so you don't have to specifically do any procedure for March 24, but if you look at 24, 25 and beyond, you are doing audit of only 24, 25 the next year. But you will have to do some procedures for the previous year's audit records, whether they are being retained. Retrievability is not a problem, and no unauthorized modification to those audit trail records. So that is why the audit and auditor's rule says procedures will have to be done from 24, 25 onwards. So that's a little clarification.
So with due respect, audit trail is not part of books of accounts, sir.
Sir, now...
Because if you say that, assume for a moment that it is part of books of account, then I am having something in the books of account itself to say that the books of account is correct. That is not the objective. Audit trail is a separate thing. Books of accounts, they act as clearly defined what are going to be by books of account and all. So audit trail is something which is recorded separately, and I have to comment only, I have to restrict myself only to the 4 points, 4 or 5 points which has been given pertaining to the audit trail.
Yeah.
So, okay sir, because it goes on to say that if my audit trail is not correct, it does not mean that my books of accounts are not correct.
No.
In the FAQ itself it says, suppose for some strange reason the client is not maintaining that audit trail.
Correct.
You have to report on the audit trail,
Correct.
but that will not have an adverse impact on the books of account.
No, I agree. That will not have any impact on the financial reporting per se. Non-availability of audit trail will have to be reported under 11G, but that will not result into any, material
Adverse
misstatement
comment.
or adverse comment on the financial numbers. Yeah, I take your point.
But in cases you may have to give a qualification also for the audit trail. Non-maintainable, you may have to give a separate qualification in this case.
It is.
It's in the guidance note, they have
Yes.
given exactly what is the qualification we have.
Yeah, exactly. I'm going to talk about it. So now audit trail applicability. Okay. So based on the discussion we had so far, what is your understanding of applicability of audit trail? All companies.
We are
Okay.
using accounting software, sir.
Companies using accounting software.
Because Excel is not a software, according to me. It's a
No,
manual.
again there's a debate whether Excel is an accounting software or not. There is
But what about Tally, sir? Tally,
Tally is an accounting software.
so it means, of course, we are not using Tally. But suppose if someone uses Tally, he should have been forewarned 1 year before and told that you have to enable this feature.
Sir, actually Tally is well advanced when it comes to audit trail requirements. Surprisingly. Okay, there's an edition called Prime Edit Law version.
Edit law version.
So when you implement that, audit trail requirements are taken care of. Okay, any change that you make to the record, it records it. Old value, new value, who changed, when changed, all that is taken care of.
Means even if you delete a record, it's taken.
It is. Everything is there. By the way, it is not configurable. It comes along with the package. Once you implement it, it is there. You don't have to worry about even the control surrounding that audit trail configuration, etc. So if I compare SAP or other ERPs with Tally from that point of view, Tally is the winner. You know, maybe a few thousands of rupees you have spent only on Tally, but few crores of rupees on this. You're non-compliant here, whereas you're compliant here. So that is it. So applicability. So from financial, already clarified in 1st April 2023 onwards. Then applicable to every company that uses an accounting software for maintaining books of accounts. If I maintain my books of accounts manually, then I will not have audit trail the way it is required in the Act, in the rules. Applicable to standalone financial statements and also consolidated financial statements.
When the books of accounts are maintained manually,
Yeah.
how the reporting is done for
It is not applicable. No? The 11G is not applicable because it
is not applicable and hence we are not reporting.
Yeah. Because it's not a requirement. I mean, if the company is maintaining books of accounts manually, everything is manual record. Then, you know, if any change in the voucher, it will be there in the voucher itself. You know, somebody changed the amount, etc. It should be signed, etc. So that's there.
Also assuming that in a case where Excel being debate or whatever, if the books of accounts are maintained in Excel, and for a moment we assume that it is not an accounting software. How do we?
If it is, see, Excel, if you are maintaining books of accounts, are you creating all the journal entries in Excel itself? So if you are making a sales, you know, I'm just clarifying, if I'm just creating sales invoice, debiting customer, crediting sales, crediting tax, will it happen in Excel? Maybe use Excel for consolidation.
But being an accountant well versed on that, I am able to maintain the information required for the purpose of preparing a financial statement in Excel itself.
So there are two different things.
I may not
Are you maintaining books?
credit entry in Excel. I am agreeing with you.
Correct.
But what I am saying is I have a control n number of Excel sheets, various sheets, whereby I am able to generate my own trial balance with the available information what I have been doing for quite some time.
So if that is the case, if this is an accounting software in Excel, will be subject to audit trail. Again, it will be a failure. Why? Because you cannot have configurations in SAP to enable and disable the audit trail feature, and you can't demonstrate whether the feature has been operated throughout the period and all that. So again, you know, you assume that Excel is an accounting software, it will be a failure from the audit trail reporting point of view.
What will happen if I outsource my accounts and that person maintains it on a computerized environment?
Sir, we'll talk about it. I have a slide on that. I have a slide on that. It is like SaaS arrangement, software as a service, and you know, guidance note also talks about the requirements in terms of, you know, if it is done by a service organization. I will touch on that. So no exemption provided based on the turnover, net worth, or nature, public, private, or 1% company and all that. Every company is subject to this. And then, you know, this again points it. Required to comply with the rule irrespective of whether the accounting software is hosted and maintained in India or outside India. Doesn't matter. I can have a server in US, but that server should also be subject to audit trail. Okay? Whether maintained on premise or on cloud. So that's the point that you raised. Whether it is on premise or on cloud, you know, the audit trail will have to be enabled. Okay? I'll talk about the specific requirements later on. And or subscribe to a software as a service platform, software as a service. Whether it is maintained in India or hosted outside India, on-prem or on cloud, you know, this is a requirement. You'll have to do it. There are practical challenges. I will talk about it later. So applicability, are there any issues? I mean,
So the
understanding.
applicability one point, I feel it should be under the Companies Act. For example, if it is a partnership act or existence or non-existence of audit trail, I need not have to report. For example, if I'm going to report on a partnership firm or it's not required because I'm not registered under the Companies Act.
Yeah.
So it is the primary thing, it should be reportable under the Companies Act.
Exactly. So point is, no, I mean, any company registered under the Companies Act
Yes.
2013 those companies are subject to audit trail reporting. So that's a classification, the private, public or one-man company and all that. So LLP and all that is obviously not under the ambit of audit trail requirements.
Raja, just one doubt.
Yeah.
You told it applies even to console.
Hmm.
Console means if I have any subsidiaries outside India as well, so even they'll have to come into the ambit.
Correct. So if that is to be reported here in India, you will get the component auditors report. So component auditors are supposed to be reporting on the audit trail requirements to you. And like any other financial numbers, they will also report on this and we consider that in your consolidation.
Sir, but Rule 3 is not applicable to the local, to the overseas companies. The Rule 3 of accounts rule need not be applicable to the overseas component. So, why can we conclude that this rule is not applicable to the component?
No, if it is going to be forming part of your consolidated financials in India, then that company will be subject to this rule. This is the company registered under the Companies Act.
So, in case of a separate legal entity, which is say an example, a subsidiary incorporated outside India, they have their own set of rules as per the local law of the land, which need not be corresponding with what Rule 3 accounts would say. So in that case, should we still we'll call out that this is not applicable to them, or should we say this is not covered?
Sir, do you want to clarify this?
You're asking me? Yes, sir. See, this audit trail and all that, no other country other than India has got this. So to answer your question, yes, they are not obligated to report on that. And to answer your question, yes, you will have to say in the consolidated accounts, we have consolidated an entity which is a foreign company to which this rule is not applicable. You'll have to actually call it like you said. Yes.
So is a company registered under the Companies Act? If it is, then it has to be reported here.
I have a clarification. If
Sir.
I have an overseas branch which is subject to a separate audit by the branch auditor there, and I'm consolidating the accounts here, like sir mentioned that overseas branch is subject to, let's say, the Singapore company law or whatever I think. Even though it is subject to the Indian company law, do I have to ensure that there is an audit trail so far as the overseas branches books of accounts are concerned?
So that company is not registered under the Companies Act.
It is a foreign company
Yeah.
in Singapore, but it is subject to the provisions of the Indian Companies Act. And the audit of
He's saying it is a branch, sir. It is not a company.
Okay.
He's saying it is a branch.
So if it's a branch, it will be forming part of your books of accounts, no?
Correct. But
Yeah.
then it is an overseas company and
No, is it a company or a branch? It's
a
not.
branch. I'm a company with a registered office in India. I have a branch in Malaysia or Singapore where I am getting the branch auditor to submit the audited report to me. They maintain a books of accounts and the auditor verifies the books of accounts. Should I ensure that the books of accounts being maintained in Singapore or in Malaysia comply with the audit trail provisions?
It should be, no, sir.
It should be.
Yeah.
Yes.
So in a practical way, what happens is invariably those accounts which are passed there, no, in foreign branches, head office has got a control over all the entities.
We have
Invariably, that is the same software application which is also hosted there in that country, and generally we pass the entries there in that software so that head office, the consolidation becomes seamless.
It does. But what happens sometimes is we do not keep, the head office doesn't keep a track at all except on a quarterly basis, monthly basis or something like that. They get a kind of a dump which they kind of upload it in.
That's for your MIS purposes, it is okay, sir.
Even
But
for
when-
the books of
No,
accounts.
for the
man-
books of account, in my opinion, since as Sir said, is it a company, is it incorporated in India, you may have a branch there. Nothing prevents you from having a branch outside India. But the primary company is incorporated in India, you are bound by this.
Yeah. Spot on. Okay. Sorry?
Section 8 companies.
Yeah. So coming to preservation of audit trail, just again going back to 128(5) of the Act, preserve for minimum period of 8 years. Then companies would need to retain the audit trail also minimum period of 8 years. Okay. Auditor is required to comment whether the audit trail has been preserved by the company as per the statutory requirements of record retention. So 128(5) applicable to the backup as well. I mean the audit trail as well.
Here for our auditors, the responsibility next year is to again go back to the previous year and find out whether all the things are there. Now, do I have a check digit or what is it that I have to see to it the back trail? Today I am saying that it is not tampered. 2 years down the line, how can I say that second year it has not been tampered?
Again, look at the volume of data that one has
Make
to
an
have.
emphasis of opinion saying that it may not have been done.
So look at the volume of data as well. No? Suppose if there is an audit trail which is enabled, and if you have got say 2 GB data for year 1, and then the 2 GB becomes maybe 10 or 15 GB as it grows, right? So that company has to maintain all of them for 8 years.
But is there a rationale to it? I mean, if I have already done an audit in a particular year and if I have established the audit trail, moving forward, why do I have to comment on the existence of the audit trail of a earlier year?
This is more to aid for an
They
investigation.
implement the 11G.
This is more to aid for an investigation. So just because once a notice is served, somebody doesn't cook up the books.
Yeah.
So that is why we are required to see the older things that is not changed.
This is for what? Forensics, no? There are instances where they have gone and done it for the earlier year.
Correct.
So what happens is that when they go in for a forensic investigation, they're not able to get into this audit trail at all. Because they say that we do not have to have the audit trail, so it is disabled or whatever it is. Then you can play havoc around it. So they say they put the responsibility very comfortably on us.
Innocent charter.
We're all supposed to ramp up. We're all sitting here and listening to the
We are
technical
doing half of their
presentation.
work.
Tedious, man. What do you say for that?
Yeah. So when you look at the specific ERPs, you will really go, mad if I put it that way. Because a lot of configurations, ACP themselves call something, and it's not available. When you go back to them and say no, we are not going to change it. We are not allowed to change it. If you change it, we will not provide you the software support. So a lot of practical difficulties. I'll just talk about it. So moving on. Next is audit approach. So again, the highlighted one, the management is primarily responsible to identify the books of accounts and the accounting software. I can, as an auditor, go and ask management, what is your planning? What is your books of accounts? Which are the applications that is supporting the books of accounts? Show me that. And for each accounting software, they should also identify the related technology components, which database, where is it hosted? If there is a planning sheet as such. Okay. I just want to take a minute over here. Suppose a company is having a POS, point of sale system, wherein all the sales invoices are created. Okay. They transfer all those entries on a daily basis into a accounting system. One consolidated entry will get into the accounting system. Will that POS be subject to audit trail?
Yes, it should be.
Yes or no?
Should be, yeah.
Yes, because the individual transactions are recorded in that point of sale system. Any change to that will have to be maintained in an audit trail. So that application will also be relevant for audit trail. Okay?
Even your payroll software should be subject to audit trail.
Of course, sir. Because a pay register, which is your books of accounts, coming from your payroll application.
And some companies use separate software for inventory management.
Yes. Yeah.
So you will come back to the point where the gentleman there raised, whether Excel will have to maintain audit trail. I'm sure he will give an answer for that also later.
Yeah. So, so identification of that as management responsibility, you are going to say yes, whether it is complete or not. In case not complete, suppose they say payroll, I don't have audit trail, I am not included. And our question should be, payroll is not forming part of the books of accounts. So it's pay register. So the pay register is driven by your master data, all the configurations there. So it should also be enabled. Somebody would say my payroll is outsourced.
The problem could also arise when I abandon payroll A and move to payroll B.
Exactly. Not only for payroll, sir, any system for that matter.
If I move
Migration.
from Tally to SAP, the same thing could happen.
Correct. So then ensure, management has to ensure each software.
More complications. Offline, I'll give you more complications.
Each software has an audit trail feature. Management has to ensure all this in the second package. Audit trail captures changes to every transactions made to books of accounts. www. The audit trail feature is always enabled, not disabled. Okay. Audit trail is enabled at the database level as well. Audit trail is appropriately protected from alteration or any modification. Audit trail. Audit trail, when I say it is audit trail records. Somebody changed a journal entry, for example. You have that old entry, old value, new value and all that. That is called as audit trail record. That is there in the system. Somebody should not go and make changes to that audit trail record itself, no? Defeating the purpose. So the audit trail is appropriately protected for any modification. Audit trail is retained as per the statutory requirements.
But is it applicable only for change of data, or even if it is, for example, approval level? Supposing if I have to approve, whereas somebody else has approved the transactions, even such kind of transactions will come into this.
Sir, approval is a different thing. So by approving it, it is not impacting your books of accounts, no?
No. I am eligible to approve only transaction up to 1,000 rupees.
Right.
Whereas I myself have used somebody else's approval mechanism or whatever it is for 1 lakh of rupees. Even that is supposed to be forming part of this, right?
No, not really.
No.
Why? Because we are not talking about controls here. We are talking about approval controls. Who's doing what? That's IFC.
Yes.
IFCFR. Internal financial controls or financial reporting. So I leave it there. From the audit trail point of view, we need to only say who did the transaction. Only one thing, sir, when I started off the definition of audit trail, even creation of an entry is an audit trail. Somebody should not be misunderstood that only the changes or deletion of accounting entries will be requiring audit trail. Even if you create a journal entry, we'll have to have an audit trail, who created, when created, and all that. So creation, changes, deletion, all of them will have to be captured in the audit trail.
Which means that indirectly, if somebody management overriding control or somebody wants to do a fraudulent transactions in this, it may not form part of audit trail at all.
Sir, actually, the
ultimate purpose
that
will have a much bigger.
Till the date of signing, we will pass
ICFR will be covered.
frequently due to some reason or other to avoid that, and the intention for which you have passed the entry, that is the ultimate purpose for which this audit trail was brought in. Under the journal entries will pass till the date of signing, even till the hour of signing also, to find out what is the reason behind passing of those entries. That is the ultimate purpose of this audit trail.
So even though the rule says insertion of a record is also an audit trail, more from the look at the intent point of view, the intention is to find out what changes have really happened to the records which are posted. Okay. So the controls part of it, who approved, whether it is as per the limit and all that, it's not forming part of audit trail. It's all IFCFR. SIRC said a number of entries getting posted during the closure of the audit and all that. But that's a part and parcel of the closure activity, but it is having its own control. Journal entry will have to be approved. That's again governed by.
That's what I'm saying.
Yeah.
Management overriding control.
Yeah.
Or if any fraudulent transactions, it will have to be done by any of the employees.
Correct.
It may not form part of, or it may not trace through the audit trail at all.
Not really.
Not really.
So approval mechanism is not required to be captured as part of your audit trail. If we have a risk of somebody, overriding management's controls, or a risk from the risk perspective, if you believe there's something wrong, then that's a different thing altogether. That's a IFCFR controls, and the control is not designed effectively. The approval control itself is not designed effectively. That is how somebody is able to utilize someone else's approval limits to pass the entry. So that is IFCFR. So we don't get really confused with IFCFR. From the audit trail point of view, I have to have who, when, what.
It is about how your robustness of your software, ERP software, correct? Whether it can be tampered with or it can be tampered with, whether it can be manipulated, whether it has the adequate controls so that it is robust enough not to be touched upon, correct?
Correct. So
Even
so the
if you
robust.
touch it, somebody should know that you have touched it. Doesn't prevent that. See, to go by his example, no, suppose in May 2024 he passes an entry affecting 2023 December accounts, he is passing an entry in May, is what he is trying to say. The audit trail will record that today in May, he passed an entry affecting May, affect it or not. That audit trail will be there in May, for which I have to comment whether the audit trail is there or not in the subsequent year. For the year 2024-25, I'll have to say that the audit trail is there. But he has affected the transaction for the period. It doesn't mean that the audit trail is here. It will be there.
So that is why the insertion also, on, say 15th of May or 16th of May 2024, an entry relating to 31st December 2023 has been passed. So you will have the trail, the insertion as well. Okay, so so controls over maintenance and monitoring of audit trail feature, and then one has to comment on the operating effectiveness of those controls throughout the year. Okay, then we will have to have some controls. Some controls will have to be there. So they are predominantly called as information technology general controls. Guidance clearly talks about there are 5 such controls which will have to be kind of designed and operating effectively over the period of time. One is configuration. Control to ensure that audit trail feature has not been disabled or deactivated. Management should have a control. I said at the beginning, every ERP will have a configuration to enable or disable it. So management should have a control to say yes, any changes to audit trail configuration will be subject to this, and then it is all approved. So you may ask a question, why does the management need to change the configuration? So initially I identified only 10 transactions as my books of accounts. Later on I realized one more document I have to include it. So I enable the configuration, audit trail configuration for that as well. So that will be subject to change. So that's why management should have a control to say that I added the 11th element which is subject to the approval mechanism. So if at all somebody changing, okay, I already had 10, I remove 2 more and then make it only 8. So that should also be recorded, and that should also be subject to controls. That is the configuration change management controls. The next one is about access management. So in ERPs, they will have generic user IDs. You will have come across some instances where there is one ID called AP clerk. There are 5 people using that ID. Okay. So if you have an audit trail under AP clerk, how will you identify whether it has been done by A, B, C, D or E? How would you do it? You will not be able to identify, right? That is what they are saying. User IDs are assigned to each individuals and user IDs are not shared. If it is shared, then you will not be able to really get the comfort that there is a trail available. Trail of 5 people together. So that's the second control. Third control is talking about changes to configuration. Audit trail, authorized and log of such changes are maintained. So I think we talked about it. Any changes to audit trail configuration should also be logged. So I will have to say there are 10 changes that have been done to the audit trail configuration. That 10 changes are there with old value and new value. Okay. Then restricting access. That's again, the heading is written as backup, it is not right. It should be restricted access. It's a control to ensure that access to audit trail is disabled or restricted. When I say audit trail again, it is audit trail records. Somebody made some changes, those changes are captured as per my audit trail configuration. There are tons of changes in the table. So that table should be restricted in terms of people having access to it. Otherwise, audit trail will be there with deleted version of it. Somebody wants to hide something, they can go on making the table to delete the audit trail record itself. So, restrict access, and then, if at all somebody accessing that log, there should be a control. Who is accessing the log, what is it done, and all that. This is 4th control which is supposed to be implemented. The final one is control to ensure the periodic backups is taken and it is retained as per the audit requirements. So these 5 control elements are required for somebody to comment on the operating effectiveness of audit trail related configurations throughout the year. Correct? Okay. Okay. So now, okay, we understood all that. Now, how to identify the relevant transactions? So, identification is a management responsibility. So, here assess management's identification whether the audit trail has been configured. So, what is that management has done? And evaluate management's approach regarding identification of the accounting software. What is the approach that you followed? Typically, what companies have done, planned companies, they've taken their trial balance and then they identified all the transactions which are forming part of those balances, and then identified the accounting software which is supporting those entries, and then identified the technology components to it. So I'd say SAP, yeah, it's one. There's another called dealer management system, wherein all the service related clients are coming through. So the DMS also dealer management system is also in scope. So they trace it back from the trial balance to all the transactions, identify the accounting software. We have to get that planning sheet from the management to assess whether they have done adequate work to identify all the accounting software. Okay. And then inquire the management on how they evaluated changes. Changes meaning they know it is supposed to implement it from 1st April 2023. So what is that they have done during the beginning of the financial year to identify the accounting software which doesn't have the audit trail, and how they are going to change it. What management has done to evaluate that, and what did they do? So that is the third component of it. Meaning, 1st April 2023, somewhere in March 2023, management should have done the groundwork to say, yes, I have got Tally old version which is not compatible with audit trail, then I'm going to migrate that into Tally Prime Edit Log version. So I have taken a call. So management has done an assessment of that and then identified, what they have to do, and they have done it. So that will also give us a clarity as to how they approach the topic of identifying the accounting software for the audit trail requirements. So basically, assess management's identification, evaluate the management's approach, and also inquire and evaluate the changes which are impacted, which are required to be made. Okay. So, this is the SAS thing. Audit procedures, software supported by service providers. Really a big challenge. Okay. So let's talk about one after another. So in this case, we can look for SOC SOC 1 or SOC 2 report. I know you guys are aware of what is SOC 1. What is the full form of SOC? SOC?
So you will say type 1 report or type 2 report kind of?
Type 2.
Type 2, type 1.
SOC 1, type 2. SOC 2, type 2. So SOC 1 will be type 1, type 2. SOC 2.
The internal control is there and effectively operating.
That is one is a design. Type 1 is design assessment of the controls. Type 2 is a design plus operating effectiveness both. So design alone is not going to help you. So design plus operating effectiveness. So always we look for type 2 report. Right. So SOC is nothing but system and organization controls. SOC. Okay, this is AACPS standard. SOC controls. And some people say service organization controls.
Yes.
SOC as well. But the real meaning is systems and organization controls. SOC 1 is about internal controls relating to financial accounting and reporting. SOC 2 is all about trust principles like security, availability, processing integrity, completeness, availability. These are all the 5 trust principles on which there will be a report. So we can either use SOC 1 report or SOC 2 report or SAE 340 report. SAE is some standards on assurance engagements, right? So here either of these reports is good. We can rely on it. Provided They talk about specific control elements relating to audit trail, and it covers the entire reporting period. Typically, if you look at a SOC report will be for a period of 6 months. Maybe April to September I get a SOC report. And then October to March they give a bridge letter saying that there is no change in the system, there is no change in the processes, controls operating at the service organization level. Then combining these two, I can get comfort on the IFCFR, internal controls over financial reporting that is done. But that is not good enough for you to comment on the audit trail. Why?
Operating throughout the year.
Operated throughout the year. The controls have been tested only up to September. October to March, they are not tested. So without testing results, how would you comment on operating effectiveness of those controls for the entire period? You will not be able to, right? That is where wherever it is SaaS product, at least year one it is failing. Because it is not communicated to them in advance. That I need this. I need this. I also need it for the entire year. Because they worked on the old philosophy. Right, okay, 6 months, I test all the controls, we'll give it. Coming to the next. It should specifically cover the maintenance of audit trail. Whatever controls that you test here as an auditor, those controls will have to be tested by the service auditor and should be forming part of the report. If it is not, it is not.
So from the SOC reports that I have perused till now, the wordings are a single line, very vague. The details of modification and transactions are affecting operatively, and the auditor's response part, they give what procedures they did. So it is not complete in a company's rules perspective. It's just a one line control and.
What would he say? What would he say as an auditor?
Because this is coming from a large MNC.
Whoever it is, who is the ultimate recipient of this report? You will have to assess whether it is meeting your requirements or not. If you believe it is not meeting your requirements, put it aside. Sorry, it's not meeting requirements. You are supposed to be commenting on all this. Is it enabled? Is it configurable? Is it operated throughout the period? Is it restricted, protected? There are 4 questions which have to be answered by me based on your report.
Yes.
Am I equipped to give that kind of an affirmation in my report based on your report? No. I'm not going to use it. So I'll say it is not determined. Audit trail is not determined because I don't know.
So practically, whether they are giving, for example, that company is doing this kind of activity for 10 companies. So we have to, as an auditor, we have to get this report from that service auditor. So he has to address me, or he can give a blanket kind of report which that service organization can give to any of the organization's auditor.
See, your application, no? Is it a separate application for which audit is done? See, in SOC report also, no? We have 2 varieties. One is client specific SOC report.
That's what I'm asking, sir.
Yeah, if it is client specific SOC report, it's fine. If the service organization catering the same services to multiple organizations, they will not produce each report
exactly.
separately.
Yeah, that's what I'm asking, sir. Yeah.
So they do the audit for all the 10 companies using that.
Yeah, sir.
So in that case, that one report is good enough, provided your requirements are met. See, I'll tell you practically.
Because it is so costly, they cannot get each and every client a separate report there.
Not required. Not required. I need to be comfortable that my service is audited and included in that report. That report has all the elements.
Because before this audit trail thing, like no Windows or no Microsoft or so many Google, they are also giving this kind of reports to us when we are asking. So they were giving a blanket report from that UI or from whichever big 4 they are giving. No, it's a blanket report. It's not like no specific report. இது இப்படிதான் அப்படின்ற மாதிரி இருக்கும். அதை நாங்கள் யூஸ் பண்ணிப்போம். பிகாஸ் அவன் அவ்வளோதான் கொடுக்க முடியும். ஏன்னா அதுக்கே அவன் வந்து சில 1000 கோடி கொடுத்துருப்பான், 100 கோடி கொடுத்துருப்பான் அந்த ரிப்போர்ட் வாங்குறதுக்கு. நமக்குன்னு பேரா போட கொடுப்பான் அப்படின்னு we will be asking. அதனால கேட்டேன்
சார். அதில் வந்து ரிஸ்க் இருக்கு. How do you know that your application is covered in that report? If they are giving like a what do you call it? Notice. Get. No, like that is not going to really serve the purpose. No, you need to be convinced. In fact, we do a lot of procedures on that. So you say, yeah, okay, this is the application which is hosted. Where is it hosted? How do I know this report is covering that? I need to get that comfort because that is one, one generic thing. Maybe hundreds of customers will use it.
Yes, sir.
I need to be comfortable that my service, service which my client is using, is covered in the. I have to do some procedures, otherwise I can't use it.
So let us also be very clear, sir. This is a new concept which has come. Over a period of time, this will mature.
Correct.
From our perspective also.
Correct. Correct.
So let us be very,
Yeah.
let us be alive to that particular situation. That
Yeah.
we will also be maturing over a period of time.
Obviously, sir, if you just take the example of IFCFR, initial periods we were struggling with all the service organization controls. Now it's all streamlined, you get a SOC report. Similarly, this will also settle down. This will take very lesser time compared to your IFCFR because people know. So maybe in the next year itself, you will get to see all the controls incorporated in the service auditor's report.
Yeah,
So
probably when they renew the SLA, they will say that this is also to form part of the SLA.
Exactly. That is there. One difficulty which I am thinking of is if it's a global system. There are 10 companies, 100 companies using the system. There is only 2 companies from India using that. Would I enable audit trail for the remaining 98 companies? Just to make sure that 2 Indian companies are, getting comfort on the audit trail. So I don't know, how they are going to do it. Or if it is enabled, then they specifically call out that these controls are operating only for these 2 entities. So there are practical difficulties in terms of getting that in form of software. If it's a global requirement like your SOX or IFCFR, it is there. ICOFR or ICFR SOX control, everybody knows it is required. But in the beginning, SARS said that it's a requirement only in India, audit trail.
Yes.
So reporting audit trail only relevant for India, not for other countries as we speak. Okay, the report should cover the entire period. I think we talked about it. The statutory auditors should comply the requirements of say 402, meaning audit consideration relating to an entity using a service organization. Then, in the ultimate responsibility, reporting on the audit trail lies with the company's auditor. Okay, so whether you want to rely on that SOC report or not rely on the SOC report is a call that you have to take based on this. So your question is answered. The company is using a service organization. These are all the aspects that one has to look at it. I have to have a SOC report. See, if you look at our guidance note, auditors can do additional procedures. Kind of. Additional thing, is not that just getting a bridge letter. If you are able to test those specific controls sitting in India, then you can do it. Okay, so that is what they said. I can do additional procedures and then get comfort on the SOC report, but it is difficult practically. Okay, auditor need to ensure that management assumes a primary, that we already discussed. So when it is software as a service, there is a problem that we are going to face. Okay, so auditor's consideration may be quickly, which should be enabled and operated throughout the period. Access to configuration is very important from the auditor's point of view.
One question.
Sorry.
Consumer durable industry and things like that, small products like that, companies like Unilever and things like that. As a dealer, we just have to take the point of sales from them, their package, and then incorporate in our support. Basically, we take the data from them, and then how as an auditor we rely on that information for the purpose of audit trail. And then proceed with it, because for all that they may not give a confirmation to us stating that our audit, our accounting software is audit trail enabled and things like that.
No, if you are a company like FMCG,
We are a company.
You are a company and you are having a POS, point of sale system, or a dealer system or whatever.
They are dealer of a company.
A multinational company, say Unilever.
Correct. Yeah.
We have to take the data only from them for the purpose of accounting our.
But whose system is that? Unilever system. No?
Yeah, software.
So Unilever has two systems. One is for the dealers, the other one is for warehouse accounting. So the dealer system feeds the data into accounting system for the accounting entry.
This is probably what you said. DMS. The other side of the DMS, they are using it. The safer, if it is a manufacturing setup, the OEM will have a DMS, and the dealers will use the DMS system to extract details for their accounting.
No, what do they extract?
What is the sales?
Sales?
I'm taking an example.
No, not sales. They will be purchase orders, right? You're taking the example of OEM.
Their sales and then our purchases.
Yeah, but your purchase. So your purchase will be coming from Unilever system.
Their purchases. So
Yeah.
what they have, correct.
Yeah.
For the dealer, it's a purchase.
Correct.
So that details they are consuming from the OEM's DMS. So in that case, how to report?
No, I have bothered only about my entries here. Why do you want to bother about others?
You are accountable only to the finished product, what you are purchasing and subsequent transaction only. You have nothing to do with the
What
OEM's,
they are doing.
Correct.
operations and their this thing is nothing to do with our accounting.
Okay.
Yeah. So is it your system? It is not your system.
It's not ours.
Yeah. So you
But as an auditor, I am relying on that financial information for the purpose of audit.
what do you rely on? What do you rely on that?
That is, the entries are made only from, extracted only from their software.
Yeah, but you will rely on other controls also, no? What is that? The Unilever says there are 100 invoices. Will you account all 100 invoices without doing any additional procedures?
No, what is relevant for us?
Yeah, I mean, that's what I'm saying.
Yeah.
Unilever has done lot many transactions, 100 of transactions are relating to you, and you will do some controls to ensure that those control entries are supposed to be reported in your accounting system.
Yeah.
There's a control.
That's it. That exists. That control
Yeah.
exists.
So
My question
once
from the audit trail point of view.
once it is getting into your books of accounts, will you take each entry separately?
No. At the end of the month, I may pass on POS.
Then the DMS should also be in scope for you.
So
The
what I
DMS
am asking is,
Hmm.
can as the auditor of the local dealer account, can I insist a similar letter or comfort letter from the Unilever itself? For
We should
example,
ask
I'm
for it.
asking.
Service, it's like, I'm utilizing the software given by, the other entity for me to, keep my books of accounts. So you should ask for it. So it is very remote scenario. If at all it's there, yeah, we have to have.
But if I'm only going to use a dump of Unilever and put it in my system which has got an audit trail, why would I be bothered?
Not required.
Yeah.
That's what I'm saying. If you are downloading some data,
Yeah.
if there is a direct feed from that system into your accounting system, then audit trail will have to be enabled in the system. If you are downloading the data and making some changes or just uploading in your system, the audit trail requirement, that is starting from the moment you upload the transaction into your system. So, sir, it's a new thing. Everybody is learning. Everybody is learning, but it's a really interesting area to be in. Because at least 3 hours or 4 hours a day we spend on this audit trail. This client is having this information. This is there, this is not there. So many things, right? Okay. So, changes to audit trail configuration, review mechanism, completeness and accuracy of the audit trail and edit logs, and any testing performed by the management to ensure the completeness and accuracy of the audit trail. These are all the auditor's consideration. Let's move on. So now comes to the preservation of audit trail. One is empower the management to understand the procedure implemented by them to preserve the audit trail. What have we done about it? Inquire and then review on a test basis. I'm not going to do everything. Maybe on a sample basis, I'm going to test whether the audit trail is retained even for the previous years or not. And as we progress, maybe I have to select some samples in 23, 24, 24, 25, 25, 26. I can't just leave. If I'm in 26, 27, then I have to look at March 24, 25 and 26. For 3 years, retention audit I have to do. I may have to select some samples from each year to spread it across. Okay? And then evaluate management controls over retention of those records. How they are able to retrieve the record without any alteration. The retrievability is not a problem. and it is maintained for the yield of retention. Yeah, so this is the kind of audit procedure which is recommended. Yeah, so when it comes to audit reporting, so there are 3 scenarios which are being described in the guide, implementation guide. One is management is having adequate audit trail. First one, management maintain adequate audit trail as required by the account rules. Clean it. Okay. The second one is incomplete, meaning management may not have identified all records of transactions for which audit trail should be maintained. So I give an example. I ignored few sets of transactions, and then there are 12 supposed to be there. Only 10 of them have been considered, 2 of them are not there. So that will get into the second scenario. Okay. And third one is the accounting software doesn't have the feature to maintain the audit trail. Okay. And it was not enabled throughout the period. So this is a scenario most of the companies have in the current year, because they understood the requirement during the course of the last financial year. Somebody enabled the audit trail in September, somebody in October, somebody in March, somebody in January. So
what consequences? What are consequences?
Reporting, modified reporting. When you are reporting on this, you will say there are few instances. There is a reporting language also given in the guide. I'll talk about it. We'll say except these instances where the audit trail is not enabled, it has operated. I will come to that. So there's a specific wording. So scenarios 2 and 3 would result into a modified or adverse opinion on this audit trail report. First is complete, adequate. Second one is incomplete, and third one is not operated or not available throughout the year.
Suppose there are 100 changes. We need to change all the changes. What made, suppose sales made cancel. Like these 100 changes, we have to check all the transactions.
You don't have to. You will have to just see how management is capturing those changes. Are they capturing it?
Okay.
So
that it affects. Unless you change, how will you know the effects? Suppose when provision made 1 lakh, it is changed to 10 lakhs.
Right.
Unless you go through, how will you know this thing?
No, that is why your audit trail has to be enabled. The feature has to be enabled. System will capture it. You say it was 1 lakh in the beginning. Now it has been changed to 10 lakhs. So that will be there in the audit trail records.
No. Again, you have to justify this. How to justify? 1 lakh become 10 lakhs.
You don't have to justify. You don't have to justify. You have to ask the manager
whether the feature is enabled or not.
He's asking after having identified 1 lakh is changed as 10 lakhs. He wants to know whether what should he do next.
Yeah. So if you look at it from this as an auditor.
Let me explain like this. The first entry for 1 lakh was made on 1st November. You change it to 10 lakhs on 22nd of January. 22nd of January. So whether the transaction says on the 1st it was, whether the system, software system ERP captures, the principal transaction was made on 1 lakh, for 1 lakh on 1st November, it was changed to 10 lakh on 22nd January 2024, and by whom it was changed. So if it is able to capture it, then you are good enough.
Okay. So that is from the audit trail reporting point of view. But as an auditor, would you close your eyes to say, yeah, it's okay? You will also look at it, no? So will it have any impact on my financials? Could there be a fraud element to it? You will look into it. From the audit trail point of view, you don't have to look at it. Audit trail, whether it is enabled, whether it is capturing, not capturing, that's it. But you're also opining on the financial numbers, no? So from that point of view, you will have a look at it to say, yeah, there is a change. Is it really, is there a, valid change, authorized change, unauthorized change? You will do some procedure. Then if you believe that it is a risk of fraud, then you'll have to just get into that, the likelihood, magnitude of, risk of material misstatement on that. Then you'll get into the financial reporting part of it, not from the audit trail reporting part. Yeah. So, yeah, this is the language. I just copied and pasted from the guide. Okay. So, what it says, based on our examination, which included test checks, the company has used an accounting software for maintaining books of accounts, which has a feature of account audit, recording of audit trail. within brackets edit log facility, and the same is operated throughout the year for all relevant transactions recorded in the software. Full stop. Further, during the course of our audit, we did not come across any instance of audit trail feature being tampered with. This is the year 1 language. Then year 2 onwards, the second last sentence. Additionally, the audit trail has been preserved with the company as well as statutory requirements for the record retention.
So this point would not be recorded in this year.
That's not required. That's what somebody asked about it and we clarified. So it is not required. The last sentence is not required for year 1. Okay. Now, if it is unmodified, it is unmodified, clean opinion, right? If it is modified, what does it change? The same stuff, nothing changed. After this, go back. Yeah.
Sorry.
After this, there will be a sentence to say, except for instances mentioned below. Meaning, they can mention in this, for point of sale system, the audit trail has not been enabled. For payroll, the audit trail has been enabled only from 15th of September 23. So whatever exceptions that we identify, you bring in those exceptions after that except for instances below and then have the same language. So this is what the reporting requirements as per the guidance. Okay.
No, but will it trigger a qualification? Suppose I have an audit feature like you told, out of 12 controls, 10 controls are working correctly.
Correct.
For 2 instances, I found that there are some gaps.
Correct.
Will it result in a qualification?
Qualification of financial numbers?
No. See, I'll tell you in our case, in one of my friends' cases, they are MNC. Last year, I'm talking about the last year. The the accounts rules were introduced where they told that the backup should be maintained on a daily basis and the record should be physically maintained in India. Their ERP had the feature of having a daily backup, but the servers were not physically maintained in India. The auditors said that they told that the servers are not maintained physically in India, and this is a qualification.
Correct.
So similarly, are we bound to give a word qualification for this particular?
So this is going to be a modified opinion, no?
This para will be modified, not the entire financial.
Yeah, this audit reporting under 11G, reporting under 11G is a modified opinion.
Not
like
financial statement opinion.
So only in respect of audit trail, not in respect of the financials.
Correct. So actually, nowadays people have started talking about, okay, on audit trail you're reporting something, audit trail not being available. You should also think about what is the likely impact of this to your financial audit and financial numbers, and then bring in the documentation also into your file, what we have done. Because somebody says you found an issue, but what have you done about it when you report on the financials?
There may be an impact.
Yeah, maybe an impact, or you need to professionally, apply a professional judgment to understand what it is, then call out to say, no, it is not having the impact, we are not impacting my financials. So there will be an indirect relation between this and that. Okay, so when it comes to console, again the same paragraph, I am not going to read that entire thing. Paragraph copied from the guidance. If it is exception, you say, so based on examination performed by the respective auditors of subsidiaries, associate, joint venture, joint operations, which are companies incorporated in India, whose financial statements have been audited under the Act, except for instances below. One of my subsidiary, no audit trail maintained. Okay, you can mention all the instances and then say the company, subsidiaries, associates have used accounting software to maintain its books of accounts, have a feature of recording audit trail operated throughout the year, did not come across any audit trail being tampered with. So if you look at modified and unmodified opinion, only thing is between we bring in that except for instances below, we will do it. So this is how it is required. Okay, so what are the potential exceptions that could be? Potential. Audit trail feature is disabled for one of the books of accounts during the course of the year. That could be a potential exception. Not operating throughout the year. Yeah. And then maintained by a third party, where I am not able to get the SOC report, I'm not able to determine whether the audit trail feature was operating for the year or not. Or there was some migration. You talk about it. Somebody migrated from Tally to SAP, and SAP available but Tally not available. So the migration could also be a problem. So they would have even forgot about it. They enabled audit trail very neatly in Tally Prime Edit Log. But when they migrated from Edit Log to SAP, they would have lost all this because SAP it has to be configured. These are the potential exceptions. And then audit trail not preserved. Access to the audit trail is not restricted, or it is not preserved as per the statutory requirements of the Act. So these are all the potential exceptions. Coming to the audit trail practical challenges, which we have seen. The first one, global instances of ERP. Okay, I got one instance of ERP, which is hosted in somewhere in Singapore, that is catering to multiple countries. India is one of the countries. So I got 50 operating companies. When I say companies, now 50 operating legal entities. One is operating from India, one is from Singapore, one is from Malaysia, one is from wherever. Right? So if you have to enable audit trail in that SAP, it has to be done at the application level. All the companies will be subject to that. I cannot say I'm enabling audit trail only from India. The remaining 49 companies are not required. As of now, there is no provision like that in any ERPs. If you do it for all. Will companies do it? So they'll say, okay, in India, so what is the fine? 2 lakhs, 20,000 rupees, paid. Okay, and on the lighter note, but I don't think so. They can take that call, but overall it will impact their credibility.
Yes.
So second one, applications having inherent limitations. Okay, so I developed this application a few years back. I never thought of audit trail. Even for inserting a record, I will not have a trail. I have been using the system for the past 20 years. I cannot go and enable the audit trail today. So I have to change the entire accounting system itself. Maybe migrating into some other new system, or look at the framework of the last in the previous system to see how I can enable the audit trail. So if you look at some of the homegrown applications, when the applications are developed and used by a client, they will have this problem. Inherent limitations. Similarly, particularly in FS sector, they use many homegrown applications for loan management or for collection management, etc. And then database having inherent limitations. So you will have everything. Even if you enable the audit trail, you will not have the old value.
Move away from that.
Sorry?
Switch out that please.
Yeah. So at the database level, how they do a data change? No problem.
So maybe I'll stand here.
Yeah. So on the database level, you'll have an inherent limitation that you will not be able to see the old value of what has been changed. It's a typical problem. Okay. And then the fourth one is, it will impact the performance, because when you enable the audit trail, those many additional records will get created and saved in the database or in the application itself. So people would believe that it is impacting the performance of the system. So that's a practical difficulty, And then it will have, end user computing tool, Excel. If somebody is using Excel, how do I enable the audit trail for Excel? Because audit trail cannot be enabled in Excel itself, So that could be a practical limitation. And direct changes to data at a database level. So I think I talked about it. So
how somebody will make changes to the database, they will write an SQL query. If somebody is aware of it, they write an SQL query to say, pick up the data from this table and posting date, let's say 31st March 2024, change posting date to 31st December 2023. So what do? They go pick up the date field and then say what is the value to be inserted, modified. They only see 31st December 2023. The moment they execute it, the 31st March 2024 will get overwritten with 31st December 2023. That old value is not there. You will not see it unless the database captures it. But in most of the databases, it is an inherent limitation, it doesn't capture it. Unless they create a separate trigger for it. Okay? And then, application, then the outsourced to the third party would also be having the practical limitations. Okay? And changes performed by certain privileged users. So every ERP will have certain privileged users. They will have specific functionalities through which they can make some changes. If you look at something like write debug access, meaning I can, as an end user, I can do a write debug. Using write debug access, I can go and maintain a table. When I maintain a table, that values what I'm doing is not captured. Okay, even it is the problem in many ERPs. People having privileged access, they can go and make changes to the data without training. Okay, so these are all the practical challenges. Just take all the steps together. So now we looked at all that. We looked at the requirements of the rule. We looked at the applicability. We looked at the management responsibility, auditor's responsibility. The limitations, all that we have seen. So now, as an auditor, what is that few things which I need to do audit trail audit? These are all the steps. Books of accounts, be clear about the books of accounts, and then accounting software which is supporting the books of accounts, and ensure the audit trail is there for every transaction which is resulting into changes to books of accounts, and then database level also the audit trail should be enabled, because there is specific wording in the guidance to say the database level audit trail should also be enabled. If you may have enabled the audit trail at the application level, if you have not done it at the database level, it's still a reporting matter. Okay, and then protection of audit trail. How are you protecting, restricting access? That is the thing. And then audit trail retention. So these are all the broadly 6 steps which you have to remember in mind to perform the audit on the audit trail. Okay. Any questions before I move into SAP stuff? So this inventory software, will it result into creating an accounting entry? It will, no?
See, simple inventory software has itemized lists, and only the closing stock is posted in the accounting software as a single item.
So that closing stock entry, is it automated?
No, you are manually feeding it.
If we are manually feeding it, then forget about it. That is not a software to be considered. So the simple rules are, is this application going to talk to my accounting system and create an automated entry? If yes, this should also be found in parameters.
So if another case, invoices are generated on a separate package and every entry is passed separately manually again.
Yeah.
So we need not bother.
You don't have to. Because
in real life, does it happen like that? No, again, coming to your inventory thing, sir, even if you are posting a manual entry, your source data is the inventory software, no?
correct.
So it has to be forming part of the
That's
audit.
what, if you are consolidating everything together and passing an entry,
Single entry for the value.
yeah, then it's a problem. Individual transaction wise, you'll have to take an accounting entry here. That's what Sir also said, is it practically possible? See, if there are 100 invoices or 100 material movement, if there are 100 items which are produced today, if there are 100 movements from work in progress to finished goods. If you are consolidating everything together and then passing one accounting entry here, even then this system has to be in scope because individual transactions are sitting in that system, which is forming part of your books of accounts. Anytime, if you want to see the breakup of this entry which I posted, you'll have to fall back on that system. Then it is relevant. If you say, no, all the 100 entries are taken here, I don't have to fall back on the inventory system for any time, right? I have everything in my accounting system itself. In that case, I don't have to worry about it. So, thing is, whether it is automated.
The accounting system is independent, we need not fall back to that.
Correct. Independent in the sense it has to have everything as occurred. There are 100 invoices on 100 different customers. I have to bring it. Even see cash sales. Typically, you consolidate everything and then take one accounting entry. Right? But whether you are consolidating and taking this entry here, individual breakup is available there in the system. That system has to be in scope. So,
prompted the government to bring these changes?
Sorry?
What prompted the government to bring this requirement of
Back-ended entries
I think
and
no. Last 2 years, if you look at the audit maintenance of records as well as this year, I think the forensic audit is really the problem. A lot of financial frauds have happened in the last 4 or 5 years. And they are not able to trace the source records.
Some small companies entered the books of accounts after the completion of financial year. How can I do it?
After the audit is over,
There will be practical difficulties, you
understand? Tampering with the old transactions, and there is no trade. People started going to the based on when it was when it came to
As auditor, I have to qualify the books of
they started saying that there is no
Audit
trade
trade.
that they have done the fraud.
There is no audit training.
No audit.
It's not standardized as of now. So like in GST 17-18 came first time and it was not standardized that point of time. Everybody knew problems were existing that point of time. Today, even today was not there. Now GST people are questioning about today for that year now. Similarly, even if this procedure is not standardized and we are going to report it, whether ROC people will change our clients in future, maybe after 5 years they will ask for this.
They can.
There is an audit.
Everybody know that it is a problem, but they will change us again.
They can.
Sir, your question is why was it introduced?
That
Because-
was the first question.
No,
Second
so,
question was,
there was a requirement.
After 4 years, they will again start questioning our clients why it was not because it is not standardized as of now.
Correct. Yeah, I mean, you are not.
to say whether
Whether
ROC
any
can question or
penalty
not.
or
No, that is not
they
your
can-
thing. They will definitely question.
Risk is not to the client, risk is to the person who is certifying.
Yeah, you're right. As an auditor,
NCA is putting so much of penalty on us.
So, which is why when you do the testing for all these things, document everything and keep it. Specifically document what is it that you have done, what is the conclusion you have got. And it should be according to our auditing standards. Once that is there, if somebody falls back to you, you can say that yes, I have documented everything. You may differ with me to your opinion. This is my studied opinion as a professional. This is my opinion. These are the processes which I have followed. Document it and keep it like that. We are lacking because of that. All the problems is because our documentation.
so that's well said actually. Whatever we have done is a factual reporting again. I've done all this. Management identified the books of accounts and evaluated that this is complete in my opinion. All the accounting software is having the audit trail feature or not having the audit trail feature. Database is there or not there. All that, whatever procedure that we done, inquiry, inspection of configuration, or testing of controls and all that will have to document it and say, based on whatever procedures that we performed, this is a thing. Audit trail is enabled or not enabled.
Sir, with respect to the database level changes, we have a set of clients who say we have never done any back-end change until now. So, as an auditor, how will I satisfy? See, for me, I take the list of transactions from the system to ensure that whether my user master people only have passed these entries. But if it has, they say that we have never attempted, we have not ventured into a database back-end change ever. So how would we practically go and check?
My question is, demonstrate to me.
Sir,
Show me
I
that you are not done.
I will tell you, sir, for one of my clients, one intelligent guy, he said that he has bought one package, and he has bought the package, and the audit trail, enabling or disabling the audit trail and all that is a separate module in that package. He said, I have not bought that module at all. So how can I change? Fantastic thing. So what I did was show me the invoice. What is the module? It is not there in that invoice. In your purchase invoice, so it is not there.
See, yeah. So, you know, if there is no functionality available within the application itself for you to make the changes, I can't just close it just by saying that. I should, what is that I have done as an auditor to confirm that you are not able to make changes. And ask them, okay, open an entry which is posted and try and make changes to it. And then, yeah, I'll tell you, no, go to the posting date, change the date, or amount, debit amount, go and change it. Let me look at the screen whether you're getting error necessary that accounting entry is posted, you're not able to change it.
No, practically when you advise your client, you must this is an extra cost to them. Suppose if the software earlier didn't have an audit trail feature, now you are telling them it's an extra cost to them.
That is the client's call. Sir, when it comes to this editing of the existing transaction, one of the areas where they can actually go and edit it is the remarks column or
narration column.
Narration column they can edit.
Yeah.
They cannot touch the figures, they cannot touch the account code. Other things, figures and account code they cannot touch. They can touch
Sir, all the dates like posting date, entry date,
document
date, posting key, GL account number, GL amount, nothing can be changed. They can only change the reference number and also the narration. This is also driven through a configuration, sir.
Yes, it is driven through.
They have defined that only these two fields are changeable.
See, actually, sir, the clients are recording the day-to-day transaction in the normal course of business. When we go for audit, we apply the accounting standards, how it should have been accounted instead of this. They are supposed to change that. Like capital
change it, no, create an accounting entry for it.
Forex fluctuation, gain or loss, capital or revenue, this and all, they will simply account it. Only during audit only we will advise them to classify, it should not be accounted like this, it should have been done like this. That they are supposed to do it.
So, but will they do it by calling that original entry back and then making changes to it?
They have to rectify.
Yeah, they will pass rectification entries, no? They will pass rectification entries to rectify it.
Pass a separate set of JVs marked as specifically.
Yeah. So ideally, you are not supposed to be selecting those old entries and making changes there, which people used to do it in Tally environment. Then they have to do an adjustment entry now. I debited the wrong account. Similarly, even the rectification of entries, which we would have learned it during our series. Yeah. So we will talk about SAP now. So this is going to be very high level. So my question is, how many of you believe that SAP is compliant with audit regulatory requirements? Only one.
But as you told, the remarks.
Now they are making it a separate module.
Yeah, now it is because they have to make business out of it.
Yeah, in SAP you can change the remarks column.
Yeah. So, but remarks will not impact the accounting. Narration is not going to change your accounting.
But other than that, I have not come across as far as we are concerned. I am testing.
That is why we are sitting in this program. This is an important slide actually.
Okay, so it is not. There are some nuances to it. I will talk about it very briefly. Why I am saying it is not really compliant with the audit. Okay. Before that, I need to mention some concepts to you. Okay. There are a few slides I want to explain some of the basic concepts that get into the configuration. SAP stands for Systems and Products and Data Processing. Generally, people call it as SAP. Generally, it is not advisable to call it as SAP because, according to the understanding, in German language, SAP means something different. SAP. So, if we call SAP as SAP in front of a German,
they get offended.
So that is why, you know, when you call SAP, call it as SAP, not SAP. That's one. Second one is it's founded in 1972. It's a ERP software cutting across all the processes. There are multiple modules and more than 4,25,000 customers globally, and there are 180 plus countries where SAP is in use. Okay. So there are multiple versions. Starting from 1972, we talk about R1 to release 1, and then R2 architecture, then R3. It's all about, you know, how SAP is defined. Initially, they had a mainframe application, which is hosting all, you know, presentation, application, and database layer. Then they had R2 in 1973, sorry, 79, and then R3 in 1992, and then in 2004, SAP ECC, that is, you know, ERP central component, that was introduced with multiple modules. Then SAP S4 HANA as a database, and then SAP HANA on cloud. These are all this is the evaluation of SAP, how we have done it over the years. So when we talk about SAP S4 HANA on cloud, you know, it means it's a SaaS product. Then whatever challenges that we discussed in terms of SOP report, non-availability and all that will be applicable to them. Because most of the clients are now migrating from on-premise, on-prem to on-cloud platform. So the controls relating to this will be operated by the service organizations which are providing those services. Obviously, my report will have to be from the service auditor in form of a SOC 1 type 2 or SOC 2 type 2 or SAE 3402. Okay. Okay. Now what is new in SAP? Now SAP is coming out with a new thing called RISE with SAP. We are saying, you know, business transformation as a service. The concept of RISE with SAP is called business transformation with service. With SAP. Business transformation as a service. Like software as a service, they call business transformation as a service. Now that is helping you to migrate easily from on-prem to on-cloud scenario. So if it latest in SAP is RISE with SAP. Okay? So just to give a little background about it. Now, we learned about all the functionalities. It's a total business solution. You know, it spans industries, financials and non-financial business processes, highly configurable, with all that is fine. What are the limitations? We already talked about the first bullet on the right. Global, multiple operating companies. I cannot define the audit trail only for one company. If you have to enable it, I have to enable for all the company codes. It will have a cost involved. Implementation of audit trail just for one operating companies would be difficult. That's a good point. Applications may not be hosted on-prem or on the cloud. Right? If it is on-prem, whatever procedures that I want to do it for my client, I can do it. I can look at the configuration, I can look at everything. But if it is on cloud, dependency on the service provider. Okay, configuration may have been changed or may not be applied consistently. Unless I look at all specific configuration, I cannot say, yeah, I tested this, I assume the same thing is operating for the remaining as well. For example, I looked at the audit trail configuration relating to sales accounting. Then I cannot say the same thing will happen even for purchase accounting, fixed assets accounting and all that. No, I can't do it. So I need to do specific configuration testing for each element separately because configuration could be different from one to another. And they would have enabled it rightly on one component but may not so for others. Okay? And then access to certain functions is not restricted. You know, the one which is talked about, the right debug access, could be a problem.
Can you elaborate a little bit, sir?
Right debug, in a sense, SAP has given a functionality wherein, you know, the programmer can look at, you know, the issue that is there for troubleshooting. Okay. You know, they run a program, they find out what is the error which is coming, and then they are supposed to go back and correct the program and make it right.
You mean the ABAP program?
ABAP program. That is called debugging. So debugging will be, but if they get it the right debug access, on the go, I can go and make changes.
In the coding?
In the coding itself, I can go and change this table value from this to this. Okay. For that, you will not have a trail. if it is used in a different T code. T code in SAP, it's called transaction code, which is like a menu option. If I use a transaction code called SC16, if I do a debugging, I will not be able to get that old value new value. SAP doesn't have it.
Suppose, so you mean to say, suppose if for SE16 the programmer makes some changes in the programming code, I will not be able to track.
Correct. Not programming code. I can also make changes to the data in the table. In the programming code itself, I can go and check. So assuming there is a table called BKPF. It's a table which is capturing the account header data. Okay. In that table, I can go for a specific journal entry and change the posting date to something else.
So, with due respect, sir, if this is done, then the entire database, it will fall into get into an inconsistency. So that is why it will not allow, because subsequent to that data, there are a lot of other data which have come. So the moment you touch something, each of these things has got a different hash stored somewhere else. So the moment you touch a particular transaction, the hash value will get different, it will get changed. So it will not allow you to do it also, number one. Number two, generally any person who is operating at this level, what they will do is, okay, in an ABAP program, whenever they say something and some functionality changes will be there. They will not be doing a massive change or anything like that. Even for functionality changes, what they will do is, they will be getting into the development mode, then it will be done there, then it will get into the testing area.
Yes.
Then after that, they will be doing different regression testing and blah, 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 and all those things. Once they get a sign off, then it will go into the production.
Right system, yes.
So what happens is there is a clear audit trail for this, which invariably when we are doing the audit, we also see whether this sort of a thing is there or not.
So I'm just talking about a scenario where somebody is having the right debug access in the production system.
Can you spell it with a right debug? W-R-I-T-E-B-E-D.
The right
Right
debug.
Right debug.
Okay, I'm just, suppose somebody is having the right debug access in the system, they will be able to do it irrespective of whether I have to do it in the change management process or not. Okay?
This is a risk.
That's a risk. So, if they are not able to do it, nobody is having access to right debug and all that is a different story. But it is possible.
So you mean to say right debug means I can do it for a specific transaction. For a specific transaction, I can even get it past the data as well. Suppose if the control is restricted, then the audit trail is satisfied.
Control is restricted, still, the access element is point in time. When I look at somebody, if I say today nobody is having access, doesn't mean nobody had access throughout the year. Somebody would have had access. They would have done some.
That somebody has done this, will that be recorded anywhere?
Provided I enable.
It is there. Yeah, it is there. It is there, which is available, but there is a limitation. You will not have it for the entire year.
Sir, have you in your experience come across this, sir? This particular thing, or is it through theory? Because I have specifically raised this question with somebody. Probably you would like to take it offline or online?
I'll take it offline. I've seen it. So for all of them, I've seen it happening. Okay? So that's what I said, there are finer things which are there. Should I take a call based on, say, only few people have access, database integrity which Sir talked about? Should I take all that and say, even I'm considering all this and this is okay? In my view, I can't take that because it's a factual report. Somebody had access. If some data which is not having the referential integrity, still I am able to make changes. Will it impact my books of accounts records? That's a different story. If somebody is able to make the changes, whether tail is maintained or not, my simple answer is it's not. So you're not meeting the requirements of the rules. Okay. So in a strict sense. So the system architecture is what having a client server, a client system, really spread the work across. I don't want to spend a little more time on this slide because it's when you say R3, there are 3 different systems which will be presentation layer, along multiple end user systems, and then your database layer and the application layer. Okay, so this is what I was talking about. So this is typically called 3-tier architecture, where the first one is your database layer, where the database, the data will be there. Database is nothing but different tables which are there, right? Journal entry in one table, sales entry in another table, customer master, vendor master, all that. All of them will sit here in the database server, and the application is nothing but the SAP product itself, the SAP application itself. Okay, and then presentation layer is where the people will connect to the application. Then application connects to the database to retrieve the data and post it on the screen, right? So those are typically called the 3-tier architecture. SAP is in the 3-tier architecture. Now when it comes to audit trail needs to be enabled here at the application layer, should also be enabled at the database layer, both. Okay, it's clear? Now, so before we get into the configuration, that's a difference between programming and coding. I just want to clarify. What do you mean by a programming? Programming is writing a code. If I have to do something, I can write a code and then execute that code. Configuration, customizing means there are configurations which are available. I'll go and enable, tick box. I want this, enable it. It will happen. That's a configuration. So in an audit trail, there is a question whether it is configurable. Right? Configurable means I can go and make changes. But when I say program, it's all forming part of the program itself. You can't go and disable it. I'm writing a program for changing the vulnerability. In that program, I'm saying nothing can be changed. Then it is coded. It is coded. It is not configured.
Hard code.
Hard coded. Hard coded in the program itself. So if you ask a question to the client, is it configurable? They say no. Then how is that you are making sure no change is allowed? It is hard coded. It is programmed. Okay, so how will you test it? I can do only negative testing for this. Okay. Now, okay, just go to the next one. So programming without customizing is kind of rigid. Anything, I'll have to go and touch the program itself. Compared to programming with customizing, it is flexible. I can go enable, disable, or go, and I can just quickly do it. Okay. Both will have its own merits and demerits. Customized, then I'll have to make sure all the controls are in place. Changes are monitored, etc. But flexibility is there. Here I lost flexibility, but I don't have to really bother about changes to configuration because it's all not configuration driven.
In fact, many of these ERP guys, the moment customization is a bad word for them. They don't, because they're not very sure about what.
Okay, so this is just an example of configuration and then customizing and configuration. If you look at this one, I'm creating a vendor invoice and I'm putting a tax code as VN. So if you look at that right, the arrow which is going from this screen to that one. In this one, I'm writing tax code as VN. So the moment I say VN, it looks at the configuration relating to VN and it applies a percentage which is defined over there. 16%. So I don't go and really make changes to the program to say, 16%, for 16% I have to run this program, 20% I have to run this program. I have only one program. Based on this, the tax percentage it will get picked up. This is one example. The another example could be, there is a purchase order. So the purchase order is supposed to be approved in the system. So I can create a configuration to say, this purchase order, if it is meeting all these requirements, it should be blocked for approval. This is again a configuration. I don't say every purchase order is subject to approval. I say for this particular purchase order type, for this particular combinations, it has to be blocked. I'm just giving you examples to understand the word configuration or customization.
Can you go back to the previous example and explain it?
Yeah. So in this example, I am creating a vendor invoice.
Okay.
Vendor liability. Some purchases which I have done. This is subject to the PN tax code. Okay. So the PN means 16% tax which I have to pay. So what I have done is I have created a separate configuration there in that table for this country, for this currency, for this element, PN tax element. My tax, withholding tax percentage is 16%.
That means this is with customizing.
Yes, correct. This is with customizing.
So if you say without customizing means how does it work?
So they'll have to have a different program, no? See, in the program itself which is written, 16% to be applied as a tax. What they'll have to do, there is another tax which is required 20%.
For another country.
Another country, they have to have another program.
With a separate code.
With a separate code. So for India, for example, if India, each country is Denmark, I think.
Okay.
For Denmark,
withholding tax is 16%.
16%.
Okay.
If it is customization, I can have tables like this. Denmark for 16, US $10, 10% and whatever, right? If I don't have this customization at all, then I will have to have 3 programs. One for Denmark sales for vendor invoices, which will always compute 16% as a tax. Correct? And then another program for US at 10%. So we'll end up having multiple programs because you're hard coding the percentage of the tax in the program itself.
Suppose in this case, if I have the same software for India and the US. For US the withholding tax is 10%. For India is 20%. Suppose if I type the same code like VN or whatever it is you told. Suppose if I am entering in the US, it will automatically take 20%. Suppose if I am doing it in India, it will take 10%. If it in India, it will take 20%. And how can you say that it is with configuration?
Where are you defining it, sir? You are defining in a different table, no? The tax percentages for each country. So you are defining that in a different.
But the same code is used. Suppose if I use a different code for a different country, then it is not programming, customizing, sorry.
Yeah, it is not customizing. I got only one program for my vendor invoice. When I am selecting a country, it is going to a different table and identifying the tax percentage for that.
It's from there.
Fixed up there. Then I have only one program. If I say Denmark, this is a percentage, US is a percentage. It is playing with that configuration to bring in the relevant percentages. If I don't have this table itself, if I have to do an invoice for Denmark, I have to have a program for Denmark where I will say 16%. In the hard-coded program.
That means you need to hard code for each separate country.
Each country, tomorrow there is a change in the tax from 16 to 20%. You will go and change the program. Here you will go and change the percentage only. So this is the beauty of configuration. Okay. So most of
you change the table which contains the tax rate.
Correct.
When customizing.
Correct.
Whereas if it is done without cutting, you have to change the program as well.
Correct. So that is why if say SAP is configurable, ERP is configurable, this is how it is. Only one program, I can do it for multiple countries, multiple taxes, everything. Okay, this is the thing. Okay. So this is the same example. This is different purpose. I'm using the same configuration not to calculate the tax, but to do some activity, blocking of purchase order for approval.
Blocking means certain percent.
Subject to approval. See, if somebody is creating a purchase order with this document type, for this combination, the purchase order will be on hold. Somebody has to approve it. Okay. So I can
customizing.
Customizing.
Suppose.
Okay. If we extend the same example from the audit trail point of view, go next. So these are all the change objects and change tables which will have to be configured for the audit trail. So there is a configuration for the audit trail as well. Whether I can change or not change, cannot change, that depends. But this is the configuration which is driving the change documents in SAP. Just an example, there is a configuration which is driving the changes in SAP. Okay. Yes. Yeah. Now, typically, if you are auditing SAP, right? So, what is my books of records? Books of accounts and records. All this. The first column. Journals and subledger customers. Journals and subledgers vendors. Customers will have sales and March, debit, not credit, not incoming payments. Similarly, vendor, I will have material, and then I will have assets like additions, deletions, adjustments, and all that. This is there in the table called BKPF and BSEC. These are all the tables. Okay. Now, next. So this is BKPF is nothing but the header data, the journal entry header data, and then BSEC is the line item data. Okay. I think it is a bit technical for all of you. Pardon me, because it's a basic thing that we have to understand.
So, invariably what happens is, when we go for an audit, we are not given a visibility to this sort of a thing. Because they say that even though we may be knowledgeable enough to ask them these things, they are very hesitant to give the T codes for all these things.
Correct.
In fact, the previous slide T codes itself, I had asked them, and they gave me a T code. They gave me a T code and they authorized me also. I went into the T code, got a blank screen. I said, what the hell is this? They said that it means that we do not have that.
Yeah.
You also experienced that?
So, interestingly, sir, actually, we do some sessions on SAP for the financial auditors. So, what is that you have to know in SAP if you are a financial auditor? In fact, in our scheme of things, it's a 3-day course. And for every person who is working in the core assurance thing, they will undergo that training to say in SAP what is that I can think of. What is the T code, what is the report, what is the transaction, what is the master data, changes and all that. So this is a table, BKPF and BSEC. Similarly, these are all the tables which will have the master data. In SAP there are 5 different master data: GL, customer, vendor, material, asset and bank master. Okay, these are all the relative tables. Okay, now, yeah, this is fine. Now the interesting part is, next. In SAP, there are, now we understood the basic concepts. SAP, how it has evolved over a period of time. What do you mean by programming, configuration? Why is it important? If it is not configurable, it is programmed. I need to understand that. I need to also understand, what are how I can scope in books of accounts, related tables. Right? Now, what is available with SAP? There are 3 different laws which are available. Application law. What is application law? Okay, it is like error log. Somebody is trying to do something, it captures what that person is trying to do and the information relating to the activities which are performed. Typically, error log or operational log. This is called as application log. The next one is the activity log, meaning it is security called a security audit log. Somebody call it as SM21 or whatever, and it is saying what activity being performed. Okay, this is the second report which is available. The third one is the SAP logging. This is to trace what changes have happened. Look at this one, it's very small by the way. This is so and so field has been changed from 3 to 0 or blank by so and so user on so and so date. Okay, so this is called what? Audit log. So we have application log, we have the activity log, then the audit log. So
what's the T code for this audit log?
Audit logs, so there are multiple
T codes are there, yes.
Multiple, depends on which log you are trying to look at.
But if you go to the website, they will give you only 4 T codes. There are a lot of T codes.
There are many T codes. You know, for example, I can use any one of 82 transaction codes in SAP to post a journal entry.
Yes.
82 transaction codes. Any one. So now, after having understood this, what is the log that you have to think of when you want to report on the audit rate under 11G? Is it application log, activity log, or an audit log? Which one? Again, I am reiterating, application log only has errors, what somebody is trying to do, what kind of error somebody is getting. It was mainly for the purpose of troubleshooting. System logs talking about what is, who enter into the system, what they have done, and then it also capturing how many users have been created, any user have been changed and all that. That is system log. The third one is audit log, where it says who changed, when changed, and what changed. So when I look at all 3 of them, which one will have to rely upon? Audit log. Audit log is the one which is going to help you. So somebody says, I have got SM21, I got this report and that report. It is not going to serve your purpose because it will not have old value, new value, and what changed. All that is there only in the audit log. Okay? Fine. Now in SAP there are 2 ways in which logging can be enabled. One is through change document logging, that is called CD logging. The other one is table logging. Okay. Change document logging is done at a transactional level. Any transaction, if you want to enable the audit log, it has to be done through CD logging. The other one is the table logging, that is done for all the fields in a table. So we looked at in the previous slide that tables, right, DK, PFL, BSEG and all that. If you enable the audit rate for a particular table using table logging, any changes to all the fields, any of the fields in that will get captured. Each table will have hundreds of fields. So if you are enabling audit rate for all 100 of them, it will have an impact on the performance. So they typically do it using change document logging. Only identify, okay, I got 100 fields, 10 of them are relevant from the financial reporting point of view, and enabling change document only for those 10. Table logging typically is done for master changes and some configuration changes and all that. Okay. So now let's talk about the auditing of log. Okay. So for this purpose, I am having transaction into 3 different buckets. Accounting transactions, which will have impact on my books of accounts directly. It's like a journal entry, sales invoice posting, inventory posting, asset posting and all that. Okay. And then transactions which will not have direct impact of financials, like sale order, purchase order, production order. Whether I want to enable the audit rate, it's a different thing. That is second category. And third category is a master data. Use a customer master, vendor master model. Now the first category, accounting transactions, journal. Approach, no changes to postal accounting document entry can be made. We already discussed about it. Which is inherently protected by SAP and not changeable. Okay. Changes to postal accounting entry can only be made by reversing a document. Okay. But SAP configuration document change rules allows, define reference number and header text for changes. We discussed, there are 2 fields in SAP which can be modified, reference number and header text. That's a configuration. Using that, they can do. If somebody is defined the 3rd field to be modifiable, then it's a problem. But they can't define that field for modification if it is like posting key, GL account, amount, etc. because they are inherently protected.
Yes.
Okay. So I don't really have any concern here. at the application level login. Okay. Now let's go to non-accounting transactions like purchase order, production order. Changes to transaction this category is allowed because I created a purchase order last month. Now that there's a price change, I will have to go and make changes. I will not create a new one. And then here the changes are tracked either through change document logging or table logging. Either of the options I can use it. Now let's look at the third data, master data. Should changes be allowed to master data? Obviously, no. If there is a customer address change, what are the changes which is there? I have to changes allowed. Here again, changes are tracked with a change document logging or a table logging, and there are standard reports available in SAP itself to get a change listing. I can say customer changes. What are the customer data changes? There's a standard reports available which you can leverage. So 3 categories: accounting transactions, transactions not directly impacting accounting like PO sale order and master data. We will talk about 3 different categories and options available for us. Okay. Now, there are two. I made 2 columns here. One is change document logging. The other one is table logging. What is required? There is a thing called client. This is called recording of client. That is not required for change document logging. So bit of technical, but that is, I don't have to really worry about recording of client whether it is enabled or not when you look at the change document configuration. But when you look at table logging configuration, this configuration is relevant. If this configuration is not enabled, your table logging will not work. Even though I enable table logging for those tables, if this is off at an application level, you will not get the logs. So that is the first one. And then, does the audit trail feature exist? Yes. Change document, table logging. Is the configurable? Yes. Both of them are yes. Does audit trail capture the information? Yes. Are audit trail records protected from edits? Depends, because I don't know who is having access to those tables and how access to those tables are protected. I said no, there are multiple tables which are capturing the audit log. Those tables are protected from the unauthorized modification. So if there is no adequate restriction of access to those tables, you will have a problem. Correct. So when you look at the configuration across multiple versions of SAP like ECC, HANA and all that, I don't see any major changes in the configuration. Their configurations are more or less the same. Okay? When you understand this, you can understand it for even the other systems.
So what I used to do is, what I did is, I went for the tickets which have been raised by the finance and accounts department. So based on the tickets, they have a ticket logging software, ticket logging and tracking software and all that. So I just went and saw what is it that they were doing, and then based on that, whether it has got an implication on my audit trail is how I evaluated that particular thing. And from accounts department, there were hardly any tickets other than change of rate or something like that, which is told about configuration and all that, like DST rates or something like that. Other than that, there were not much tickets, but for me, I felt that was a nice starting point.
Yeah.
Your opinion about this?
Yeah, it's good actually, sir. The number of changes, created or initiated from accounts is less in terms of configuration changes.
Yes.
That's good to know.
But my focus was only since it is on books of account and it is a given. It's an assumption. It's a reasonable assumption that any change in the books of account can be coming only from the accounts department, any of the login guys.
Yeah, but in ERP scenario, that it is relevant even for other departments.
It is definitely, it is relevant.
Yeah.
So here I am touching anybody who is touching the accounts log, accounts, books of account. It's a reasonable assumption to say that it is only the accounts department which is. I agree with you when you say that any other department also can do that.
Correct.
But then if your ticket logging process is robust, then that sort of a thing is.
So what you have done is you have just okay. There are so many changes. I'm just filtering only on the changes requested by the finance department.
Yes.
How do you believe that changes from other departments are not impacting your state?
Yeah, that's a reasonable assumption. Is what I'm saying. It can be done. I'm not saying it cannot be done.
So in ERP
but
scenario,
it's very remote. It can be done. Technically, it can be done.
In a ERP scenario, you have to be really conscious about it, because a change which has been initiated by a sales department from the customer master might result into my change to customer master, which I'm using it for the accounting purposes.
Yes.
So that way,
here the other counter control which I have is for when I'm going to the financial accounts, the schedules and all those things. No, any aberration there which they have done, it will reflect in my when I'm doing the financial accounts auditing. No, the schedule verification it will throw up there.
yeah.
Okay.
Fine. So I'll take another 5 minutes. Is that okay? Yeah. So move on. So what is that I do if I have to look at the change document logic? There are tables like DD09, table DD03M. I'll inspect the configuration whether which fields have been enabled for audit logging, change document logging. I got a BKPF table and there are multiple fields. I select which fields are identified for change logging. Okay. Similarly, whether it is enabled or logging, that also I need to verify. This configuration will give you a comfort that all important tables, the fields that are relevant for financial accounting, they have been enabled for audit logging. Okay, change document logging, CD logging. Okay, next one. Now, when it comes to table logging, I said the recording of client is relevant. So we look at whether the recording of client is enabled throughout the table. There is a report called RSPARM, which we look at it. And then we also look at another table in SAP to see whether there are changes to configuration. And then we look at the table DD09L to see which tables have been enabled for table logging. Either this or this. If you enable table logging, fine, all the fields are captured. If you not enable table logging but enable change documents, whether all the necessary fields in those tables have been captured. So this is what we can do at a very, very high level to see, whether those fields, tables are protected from or enabled for tracking of audit. Okay. So this is a different animal altogether. There is an SAP S/4HANA. It's a database. Okay. The audit logging has to be enabled at the database level as well. So here, there are different policies. They have to enable for policy, like there's a policy I'm enabling the audit log. Then it has to be enabled for the activities like insert, update and then delete. Suppose if I enable the audit log only for insert and delete, not enable the audit trail for update, any changes made to the table will not get captured. Only insertion and then deletion will capture, not others. And I can also define, whether successful or all. So, should I enable for all or successful?
Successful.
So, it depends, all, even I will come to know any attempt that has been made, to make the changes and direct changes.
So although all is required, people will keep saying that I'm getting clogged, my network is getting clogged. Nobody, this itself is, many people will say that it's too expensive.
Correct. And then, whether for all the users or not. Whether it should be done for all the users or only for selected users. Okay. And then what is the target object, where it should be written. So, these are all the things that you have to look at it at the HANA database level to see whether it is enabled at a database level or not. Okay? Yeah, go on. So, I was trying to kind of give some inputs on SAP in terms of auditing how it is. Predominantly there are two different ways in which I can do audit log enablement in SAP, which is one is inherent, which is already there, which is not configured, which is programmed, I can't make changes to the posted accounting entry that is done. Then I said change document logging, where I can identify the tables and fields and enable audit logging. The other one, I can identify the tables and enable audit rate for all the tables, just table logging. Okay, that is at the application level. At the database level, HANA we looked at it. For each activity, I can define it. I can define the policy. I can do it for successful or all events. I can do whether for all the users or not. I can define it and then deal with it. One caveat here is, even doing all this, you will not have a comfort on the SAP HANA audit trail because the old value is not captured.
What are you saying?
Old value. Somebody is inserting a record. It is inserted. Somebody is updating a record. It will say what is updated. What is new value come to know. But old value is not there.
So like the old value of both are not displayed.
Not there.
Only
So,
the new value is there.
Correct. So my requirement is what? What changed? What changed? What changed is not. So that is how.
I thought that this is in Tally but not in SAP, but it is the other way around.
Yeah. So this is how it is. And I had another section called FAQs. That is nothing but different questions which have been explained in the revised guidance note on the audit trail. There are 25 audit FAQs. I just summarized all of them to see whether we can have a discussion over that in case there is a requirement. So given that we are already on 8 o'clock, I don't think so we can go through that. If there are any specific questions which you have in mind, maybe we can have a discussion for about 5 minutes. I'm open. I think we talked about Excel sheets.
Whether you will be sending a copy of the presentation.
There will be some changes, some edits to it. I will.
No problem. But still, when can we expect that?
It will couple of days.
By Monday, can we expect that?
Yeah.
Because, we have this audit trial going on. We are confident that it is not a problem. But still, it's better to be prepared.
Yeah.
We have a
So some of the proprietary thing I will not be able to share it.
I was about to say that.
Yeah,
Proprietary things you will not say.
So I will not be able to share some of the proprietary things.
No problem.
It's only for discussion.
No.
But whatever I could share, I will.
Yeah. It's not that I'm going to entirely rely on this. But at least.
Yeah. Go to the disclaimer.
Yeah.
Go to the last slide because that's also
You
important.
have to get into the guidance.
Yeah.
Basic guidance.
Okay.
Go to the sir, a general question, sir. Assume that the company doesn't have audit trail concepts embedded in its software. Now, as the auditor, I have reported it in my report. Based on that, whether any penalty may come on the client?
It's a good thing, sir. Practice.
Penalty.
Tomorrow, maybe ROC people will refer my audit report and put a penalty on the client. Is it possible?
Yeah, why not?
What is the amount?
I don't know. Sorry, I don't know about it. So, yeah. See, not only from that angle. Somebody can even ask you, as an auditor, what is that you've done to make sure that financial reporting is okay. That's what I said, no? Some of the laws, if it is not enabled, would it have any impact? You'll have to say, I've got all controls in place, I've done enough substantive work to get the numbers right and all that. You have to build up in your documentation. You have to elaborate on it.
So with regard to the branch which we have discussed, say I am an Indian company having a branch, say in Malaysia or Singapore, their edit log is not required or not compulsory. So naturally the books of accounts of that branch would be maintained as per that country's laws.
No, but your company is incorporated in India, no?
Yeah, but my rules and taxes, everything I have to follow as per their country's rules and regulations, Mr.
Yeah.
Even though consolidation wise, I have to go as per Indian Act.
Yeah. So that is why, for a consolidation audit trail is relevant.
No, audit trail is relevant. They may say, as per Malaysia, as per Singapore Act, audit trail was not required, so we have not maintained.
So he has answered his question, sir. He said even if they are following the foreign company,
No,
if
Indian
it's
company.
Indian company, the foreign branch, even if they are maintaining their accounts, whatever you may call it,
Yeah.
they will be maintaining their accounts as per IFRS.
Thanks.
When you are consolidating in India, you are converting it into Indian fee and consolidating it
Yeah,
in India.
correct.
Similarly, why are you doing that? Because your Indian law requires that.
Right.
Similarly, even if it is not there in audit law, the requirement is not there abroad, our Indian company, primary company, holding company is here in India. And it is only a branch. So branch will have to necessarily...
If the company says that for that we have not maintained an audit log, then we have qualified.
You'll have to call, that's what, except my
Except
Malaysia branch, which is having this accounting software,
Okay.
you know, except this, audit rate is
I
there.
understand, but by qualifying like this, you are not qualifying
is
the
qualified.
accounts. No,
Correct, you're not.
not qualifying the account. Accounts will continue to show and true FIRB.
Correct.
Only for this limited
Audit,
purpose of
limited
this.
purpose of audit trial.
11G.
So Raja, I've seen those points where you put for SAP, you have noticed some issues. On a tally front where they have this ERP tracking, any issues that you face?
Prime edit log, we have not seen any issues.
No
Prime
issues.
edit log.
Prime edit log should be there.
2.1 and above. So there is a version called Prime Edit Log version 2.1 and above. It is compliant with our
Sir, in Tally Prime edit log, the data can be converted at any point of time. And I don't think Tally Prime data log has a record as to when it was converted.
conversion in the sense.
Say I am regularly using normal Prime data, say 2.13, 3.1. If you want an edit log, there has to be a separate download for it, Tally. I can convert this normal Tally into an edit log Tally at any point of time.
No. Prime Edit Log version has to be implemented, you'll have to migrate.
Yes, a migration.
Yeah.
It doesn't give a date as to when the data was migrated.
It is.
I don't think.
It is. There is a specific.
Okay.
There is a specific thing, you know, which is talking about when it is. You know, do you want to show the screen? Specific thing which says, you know, when it has been migrated.
I'll just pull that. I have a screen on that.
I can just show you this. Okay, any other question? Hope it was interesting or I was not boring you guys with all the requirements. It was interesting. Got it? See, there is company data migrated from Tally ERP 9, username when it got migrated. There is one specific screen. That's what we said. If the date is earlier than, 31st March, then I can say it has been migrated prior to that, so entire year it was there. But it is done during the course of the year, then I have to say it is used only from, say, 15th of whatever date it is.
If you don't mind telling me where I can find this in the Tally.
Yeah, you can see the option like activities affecting edit log. So if you see this is a Tally screen,
okay.
Yeah, you can see in the particular option.
Activities affecting very lot. Okay, then thank you so much.